All right. Good morning, everybody. Morning, Tony, Luciano. Nice to see you guys. John Novak, thank you for all those great pictures this morning. Man, if you guys haven't reviewed through them yet, he's throwing a lot of gold in this room. We'll talk about all of it for sure. Good morning, Safia. It's nice to see you this morning. How's everybody doing? You ready? What do you guys say we do what we did yesterday? Let's talk a little bit about rules. We'll talk a little bit about patterns. We're going to keep it basic and simple and kind of work our way into getting to where we want to be. Doing great. I love that. How's the weather in Dallas, K-Pops? You guys still super hot there? Or did you get a little reprieve? Still hot? Yeah, it's like Texas in the summertime, right? All right, guys. We are going to talk today really about the same thing that we talked about yesterday. And the same thing that we're going to talk about tomorrow. And we do this because repetition really creates just the ability to recognize more than anything. Um, so we're going to go through our routines each and every morning, guys, setting up charts, getting ready to look at the world, and going over to, whoops, getting kicked out of Discord first thing. That's all right. We're going to work our way back and get into the education room. I'm pretty sure you guys can still hear me. Gonna pop my screen back up. Not turn on my camera. You guys don't want to see that. It's early here. There we go. Now we're back. Lenny G, we're just playing a little hide and seek this morning. That's what we do. Going through the routines, guys. Every morning I like to check forexfactory.com/calendar and make sure that I'm not putting myself in front of news because news can make the market spike, jump. It can reverse without warning. And news can really kind of ruin your day, get you slipped. So every morning I'm looking. I don't really care what they say. Non-farm employment change means absolutely nothing to me. But I do know that it's high impact. And when it's high impact, that market can get a little unpredictable, a little difficult to read because of the speed. Good morning, Jose. So if you guys were watching the market at that 8:15, 8:30 news, that high impact news, it had a pretty good push, didn't it? Safi, I know you got on the right side of it. Ron, you played around on simulator taken. Um, Good stuff. At 9:45, we've got some low impact. It's like the appetizer for the main course. At 10 a.m., we're going to have that when it happened instantly. We're going to have the JOLTS job opening and the ISM services PMI, guys. Both of these are high impact news. Both of these have the potential to make that market jump, bump, go crazy. So write a note on a piece of paper. You don't have to study and say, hey, what is ISM services? It doesn't matter. It may make the market react. And when it does, it can take away your advantage. And we're all about advantages, guys. So a little note, ask Siri to set a reminder, whatever you need. But at 10 a.m., news is going to come out. There's usually somebody that likes to help us out in the room. You know, hey, guess what, guys? News in 5 minutes. Brace yourselves. No reason to trade in a market that's going to be a little crazy. And that's it for today, guys. And that's what we're looking at news-wise. So get that note on there. And then we're going to go to the education page. And this is where everything comes out. This is where everything that I talk about, everything that we look at comes through the education page. And the tutorial section is going to be where all your rules are reviewed, where you can go back, you can look at them. And your software user guide is going to be your NinjaTrader how-to. And I want to go through the NinjaTrader how-to real quick because the most valuable tool that you can have in this classroom for participation is the ability to capture pictures, to use screencast, because that is how we are going, I'm sorry, to use TechSmith Capture. That's how you and I are going to have a conversation each and every day. Is you're going to post a picture, I'm going to look at what you post, and then we're going to have a conversation about it. Good morning, Debbie. Um, in TechSmith Capture, if you go to your search bar, guys, this was uploaded on your computer or downloaded on your computer when you got the software, when you started your demo. Type in TechSmith and it should come up. It'll give you this yellow icon down here in your toolbar. But TechSmith Capture is going to be our way to have a conversation. So what you're going to be able to do is click this giant red button. And if you hover over the screen, it's going to take a picture of the whole screen. If you hover over one chart, it'll take a picture of just the one chart. So we can use this as a click and drag tool. If you left click on your mouse in the upper left hand corner and drag it down to the right, it's going to capture this area. And then it's going to give you the option. Do you want to take an image? You want to make a video? So I'm going to capture this image, and it's going to give me what's called the image preview. And the image preview is how you and I have a conversation. You're going to bring this up on your computer. The pictures that I like to take pictures before I enter a trade to make sure that I'm following rules. I like to take a picture after entry so I can go back and review it when I'm not in the heat of the moment. Taking pictures during the trade, if time permits, it's going to help you work on a management plan. I like to take pictures very much when my rules aren't met, because what it's doing is it's reinforcing the looks of the rules that we follow, and it provides a little bit more recognition. And I like to take a picture after the trade. I like to see what happened. Sometimes I take a trade and it doesn't work, and that's okay. That's part of the process. But then it ultimately works. Maybe just a few minutes later, if I have that full picture, I can begin looking for opportunities to re-enter and whatnot, and build a plan. You're going to be able to use this arrow to point things out on the screen. The shape is great for showing me entry points, exit points, targets. Not many people use the highlight, but you could. You could highlight something if you felt like you needed to. But the most important thing that you're going to use is this call out button. And once again, it's click and drag. If I left click and drag down, it's going to give me a text box. And then from this text box, you're going to be able to write your rules on the chart. You'll even be able to spell it correctly. Write your rules. How did you feel if you took a trade? Or if you have questions about what you see, you and I are going to have a conversation. Each and every time you post a picture into the room, it's like a private session for you. We're going to open up your charts. I'm going to look at it. I'm going to see what you did, what you see, what you thought. We're going to talk about what I see, what I would do, what I feel, what I think. It's going to help in creating recognition, clarity on some of the lessons. But the more pictures that you take and post in class, the quicker you're going to get to where you want to be. So once you have all of this on here and you're ready to share it, click copy down here in the bottom right-hand corner and just bring it over to the chat box. Control V if you're in the pop-out, or just right-click paste if you need it. Absolutely you can. And Derek, tell you what, here's the easiest picture ever right there for you. Let me finish this little bit on screencast, and then I'll show you all the places you can find the rules. As you can post in class, I will click on that picture. When I do, I'll open it up and we'll have a conversation. The way John Novak just did it, he says, hey, look, here's a high volume area short that didn't work, right? He says you can copy paste your picture into the room with the free version without the need to upload your picture to screencast. Just like I told you guys, John Novak, I thought you were going to go focus on other things. I like picking on my brother, guys. John Novak is an amazing teacher. And he's absolutely right. Clicking that copy button, getting it into the room is the best way. I'm going to get the best picture out of it, and you and I are going to have the best conversation. But once you have that picture in the room, guys, if you do click the upload, sure. So Hammer, go to your search bar, and I want you to type in TechSmith or Tech, and it's going to bring you to the TechSmith Capture program. And this was downloaded on your computer when you downloaded software. Take a look real quick and let me know when you have it, and we'll go through this process one more time, guys. I don't think there's anything more important than being able to take and share a picture. I think pictures are your path to learning what you want to know. Pictures are your path to getting feedback on everything that you do. And pictures ultimately are going to go into your spreadsheet so that you can come back and study over and over. So Hammer, type TechSmith Capture into your search bar, and it should bring up your TechSmith Capture. Or you can go, well, I have to go to my main screen, but you can pull up your apps and look for TechSmith Capture in there. Lenny, it reverse. I don't even have to look at your picture. I will, Mike. We'll go through all of that. I'm going to get rid of this. We're going to start the capture lesson over again. Hammer, let me know when you're up. Lenny, I don't even have to look at your picture, but the answer is because somebody with a bunch of money changed direction. Right? We're not in control of the market. So Lenny, you had strong triggers, right? And you had no divergence, but you had 1, 2, 3 areas that weren't broken yet, right? So you had one of the 50-50 trades, one of those areas with the potential to break, but haven't yet broken. And it wasn't just one area, Lenny. You were counting on 64, 59, and 49 breaking with this momentum. That's a lot of areas hope and break. You did have strong triggers. You did have an area inside of favorable large triggers. Did it go down from right here or did it keep going up? It went down from right here at the area inside of favorable large triggers. So Lenny, what happened is when we go over entries, is you got stopped out inside of your window of opportunity. A little bit of patience would have given a better entry. A little bit of patience would have kept you outside of that window and turned this loser into a potential winner. So it didn't reverse, did it? It pulled right back. Not quite, Safia. It pulled right back to the area that we teach for entries. Pretty cool, right? Does that make sense, Lenny? You pulled the trigger too soon. That little fear of missing out got you. It's a perfect read. No divergence, strong triggers. Your entry was just below 63. Your stop would have been around 73-ish. And once this reversal bar finished printing, your risk is reduced and you're off to the races with all that momentum. That's okay. I'll help you. Great picture, great question. Guys, normally we're going to go through and we're going to answer all your questions after we do the rules. I wanted to jump in just to make sure and see what we're at, but that was a great example. The rules that I teach are going to teach you the absolute best entries, where you can get in with the least amount of risk with the most profit potential. And that's what the first hour is dedicated to. But first, everybody's ready on the capture software. Mike, you're good. Hammer, you're all set. Derek, you guys ready on capture? So let me pull up charts then if we're going to do that. When I use capture software, this is what I do, guys. I click this giant red button that says capture. Pretty simple, right? If I hover over just one chart, it's only going to take the picture of one chart. We teach, and you're going to learn on 2 charts, which means that I'm going to left-click my mouse at the upper left-hand corner, and I'm going to drag it all the way down to the bottom right. I want to make sure that I get my timestamps in. I also want to make sure that I get my price bars in because it's going to be a comparison. You want to see what happens on the large chart and why you did what you did on the small chart. When I release, it's going to give me this option right here. So you're going to capture an image. Once I click capture an image, there's that image preview. Mike, you're using TechSmith Capture? Yes? Just want to make sure. And guys, you have your picture up now, right? You guys are following along with me. Derek, rockstar. That's called a reversal bar marker. That is the point, Derek, where that bar, threatening to become a down bar, will actually become a down bar. It's called a reversal bar marker. And there it is right there in the glossary of common terms. I like it. Get in the habit of asking those questions, guys, every time. I'm going to try not to get distracted for a second. I've got my image preview. So, Mike, here we go. Oh, you're trying to get your checklist on it. Are you on TechSmith Capture, Mike, or are you on Snagit? You're on Capture? So on Capture, Mike, you have to do it the old-fashioned way. You have to use this call-out button. And you're going to have to write your rules on there. So, or acronyms, right? Did you have odds favorable momentum? Did you have a clear path? And guys, if I can be completely honest with you, I think it's more advantageous to write your rules out for the first 30 days, for the first 60 days, instead of copy pasting that trend trade checklist. So use that call out button, guys. Annotate your charts. Write anything and everything that you need to write on those charts. Talk about the rules being met. Talk about everything. Use those arrows. Circle places. And what this is doing is this is really giving you, you're associating your rules with a look every time you take the time to write it. So write it on there. Use those arrows, right? Use those circles and come through. And Mike, I promise this is going to be helpful. And then guys, if you want to make the investment, if you're just like, man, my fingers hurt, I don't want to do this, you're going to have to spend the $64 for TechSmith Capture. And Mike, if you capture a picture with TechSmith Capture, we'll capture the exact same picture. You get bells and whistles, and from here, you can have a copy of your checklist and just drop it right on. TechSmith Capture is awesome. Snagit is even better. But for me and for Mike, I believe wholeheartedly about this. Writing your rules out in the first 30 days, every time you take a picture, taking the time to type, taking the time to just get those fingers moving and get your brain looking at the looks, what it does is it just starts to really reinforce the rules. So give it 30 days and then upgrade, or upgrade today if you want. Both are going to work. Both are going to get you to the room. All you have to do is click copy. And once you click copy, it goes to your clipboard, paste it in the room, and we're going to have a great conversation. So Derek, you've already posted a picture. Great. Hammer, did that help? Can you post a picture for me? And guys, I focus on these pictures in the beginning because I think that they're the most important part. You're trying? Did you get the image preview up? And guys, this is what this class is designed for, is to get you in a position to where you can study all the time. So you're good. We'll do this as long as we need to. And guys, I see that I have a private message. No, you're not dumb, you're new. If I don't get to call you names, you don't get to call you names. So let's figure out how we get you to where you want to be. So Hammer, let's go through it real quick. Let's do it one more time, okay? TechSmith Capture's up, right? Easy peasy. And click on that red button and then just hover over something. Click that left button again. And then you should get that camera icon. When you get that camera icon, boom, here's our image preview. Give me a Y in the room when you've got that done. And again, guys, I can't stress enough, this is one of the most important things we do. I will cover picture taking for an hour if we need to. Yep, left mouse button. So click on the big, left click on the red capture, and then left click again, and it's going to give you the option to take the picture. Capture that image, left click again, and now you have your image preview. Bunch of left clicking going on. That gets you up to that image preview. Once you're there, you're home free. Easy peasy, lemon squeezy. And guys, remember, everybody's new, right? At some point, at something in your life, you were brand new. It's okay, especially with day trading. Give yourself a little bit of grace. Allow yourself to be new. It's all right to not know everything on the first day. Hell, guys, I'm years into it, and I'm still learning every day. Every day, I'm trying to add to it. That's okay. No worries. I'll tell you what, hammer if you want. At the end of class, we can go over it again. Or if you like, hammer, let me make this even easier. After the first hour, when we start looking at people's charts, since we're still doing basics, and you can do this right now if you want, there's the link, and this video will walk you through it as well. So you can click play, you can pause. It'll talk about posting into the Discord class. That's really the how-to. Go through it, try it during the classroom, and then towards the end of class, if you want to go through it again and make sure that you're solid, let me know. Or just surprise me halfway through class with a picture, because you will get this, and it'll be easy for you, promise. We just got to get over that first hump of figuring out exactly what it is we have to do. So guys, let's go through. And the reason that I talk about pictures so much, and the reason I put so much emphasis on pictures, man, Discord's kicking me out today. That's okay. We got this. On my way back. I've gotten real good at re-upping, getting back into the room. Almost there, almost there. Coming to you from the great beyond. Here we go. Guys, the reason I spend so much time talking about pictures is because the path to getting to where you want to be flows through pictures, guys. The people that post the most learn the most. The people that post the most make the most. It's a true story. And your step-by-step path to becoming a confident trader, it starts with posting your trades in class, and not just your trades, guys. You and I are going to have a conversation with every picture that you put in the class. Every time you post something. Derek gave a great example earlier. Derek popped a picture in the class and he said, "Hey Mark, what's this yellow label?" And just boom, instantly, Derek gets his answers, right? And that's what we do. It's all about that conversation between you and I. I'm in class 15 hours every week. My sole purpose in life, aside from giving Ron a little bit of grief, is talking about everything that you see, everything that you do. So get in the habit early in the demo. Get in the habit early in your learning. Get comfortable with posting and get comfortable with taking feedback, guys. I'm pretty warm fuzzy. If you have thin skin, send me a message privately and go, "Mark, it hurts my feelings when you tell me I broke a rule." I'll tell you to suck it up a little bit, right? Because you got to learn the rules. And then you're going to track in a real time your performance in a spreadsheet. Nexgen also provided you a spreadsheet. Again, if you go to the search bar, let's see, if I type in 90, it's going to bring up that 90-day training worksheet. Guys, the worksheet is nothing more than a trade journal. And your first page on the worksheet, and I can bring mine up, is where you're going to track every trade that you take. You're going to post a link from screencast. You're going to talk about what type of trade, what did it look like, and more importantly, you're going to go back and study it. So everything that you did yesterday, every trade that you took yesterday, this morning you should put a set of eyes on. And you should say, all right, what worked, right? Guys, yesterday I saw a lot of winners that had a lot of momentum involved. I saw a lot of winners that had entries at the best of the best spot. I saw a lot of winners that had smart management, right? And what didn't work? Yesterday we saw some losers trading in determination conditions, forfeiting momentum, getting in too soon, getting in too late. And what felt easy, what felt forced? Guys, if you go through this list every morning, this is what I'm looking at, this is what I did, and this is my focus for the day. To do the good stuff better, to do the bad stuff less, and just keep working on that path. But a brief historical study each morning, it's going to prepare you for the day. It will accelerate your learning. And then the second page of the spreadsheet is just a giant grid of your personal trade setups, making sure that every time you pull the trigger, the rules are met, right? This is why we annotate over and over. I keep trying to open up my spreadsheet, but it just keeps giving me the picture of the spreadsheet. So your first page is your tracking. Your second page is your personal trade setups. Every time I get a rules-based entry, I'm putting it in this green section. It'll be one column wide on yours. I have so many now. I have about 245 pictures. Every time you guys post a winner in this room, or not even a winner, a rules-based entry, I try to steal it. I try to put it into my spreadsheet. And then I click and drag and I put that spreadsheet in the room, and I encourage you guys to steal this. Start looking at all of these pictures, guys. Your first 20 days with Nexgen is entries, getting in at the best spot, getting in at the point where the market is likely to continue. Every great entry creates a management opportunity. So your next section is going to talk about management. All the pictures where you go back, annotate the chart. I could have held longer. I should have gotten out sooner. You're going to build your management plan based off of your great entries. You're going to begin to recognize patterns. We can put those in the chart reading things. And then this is, I should change the name to the Mark Novak section. These are termination conditions. These are areas that may reverse the market. Study these. This is going to keep you safe. And this is one of your rules. So guys, use the spreadsheet, right? Post in class, use the spreadsheet. Our first hour is dedicated to learning the rules. The 3 rules for the high probability trend trade, you're going to simulate all day long. You're going to simulate your trades, you're going to practice your rules, you're going to practice your entries, you're going to work on your management, and you're going to post pictures in class so that we can talk about everything that you do. We're going to simplify today. Our first focus is going to be a high probability trend trade. We're going to talk about the rules, the advantages. I'm going to show you how to recognize them. And we're going to create a foundational approach to learning, guys. You're going to learn one thing and then move on to the next. And then you're going to learn that next thing and move on to the next. And what you're going to do is you're going to get good at these things individually, and then you're going to tie them together to take a trade that's defined as when each indicator on every chart agrees for the rules of the trade. You're going to have the strongest triggers, nothing in your way. There's nothing between you and your targets. Guys, this high probability trend trade that we talk about in the first hour of class is a trade that typically wins 70 to 80% of the time when you follow the rules. This high probability trend trade, oh my gosh, I'm getting booted again. I apologize, guys. I'm not in charge of Discord, and they seem to be angry at me right now. On my way back. I'm going to talk while I reload, guys. This high probability trend trade is going to give you a skill set that nobody's ever going to be able to take away from you. And that skill set is going to be chart reading, because 90% of what you do during the day is going to be chart reading. 90% is just looking at your indicators and waiting for advantages. We are professional waiters, guys. We're waiting for the advantages to be present. Your chart reading is going to allow you to understand where the market is likely to continue. You're going to use that continuation point for your entries for that highest probability trend trade. You're going to understand where the market is likely to go. That's the management side of things, using momentum and Fibonacci to get the most out of each and every trade as you grow with the software. And finally, you're going to understand where the market is likely to stop. And those likely to stop points can end a trend, can create a bounce, can mess up the direction of your trade. And those likely to stop areas, what we call termination conditions, also are the anchor for the highest probability trend trade, guys. When you are coming from a termination condition, when the market reverses from Fibonacci, from one of these termination conditions, it creates the highest chance of success going the other direction. Good morning, Bobby T. So we're going to focus on one trade. We're going to focus on the highest probability trend trade. We're going to keep it simple. And ultimately, that high probability trend trade will take you into other trades. And we'll talk about those trades before the day is over. After class, go back, replay the market replay data, and just replay the day. Fix your mistakes. Take the trades that you skip the trades that you shouldn't have taken, and take pictures of the correct trades. Get them into your spreadsheet. Save them for class tomorrow. And you're going to repeat this process every day, guys, until you're always taking the correct trades. You're not practicing the wrong trades because you want to watch your pretend money go up. Pretend money doesn't build a trading plan. If you're practicing the wrong trades, you're actually setting yourself up for long-term failure. And then once you guarantee yourself you can win, that's when you're going to trade live money. That's when you're going to go to one of those prop firms. So high probability trend trade. 3 rules. So Derek, I put these in there. That's your first set of 3 rules. There is also the rules for the high probability trend trade that are a little more verbose right here in the education material. And then guys, I want to give you everything. If you come to Discord, there's also a section called Trading Rules. Whoops. And from the Trading Rules, you're going to have those trend trade rules again. So we try to scatter these out all over the world to make sure that you guys have access to them. And the rules are simple. They really are. It's only 3 rules. And these 3 rules are going to provide 3 advantages. And that's really the key, guys, is believing in the advantages, trusting the advantages. The 3 rules will give you the advantage of momentum, the advantage of a clear path, and the advantage of an entry area. And when you piece these 3 together, it creates a trade. Guys, 90% is waiting for these advantages, 10% is utilizing them to enter the market. These 3 rules happen on only 2 charts. Remember, simplicity. Your large chart, guys, it may be a 13.2 if you're trading crude oil. It may be a 34.5 if you're on the NASDAQ. But your large chart is going to define direction. You're going to understand what direction the market is moving just by looking at the background color of your large chart. You're going to understand momentum, and you're going to define areas all through one chart and really one bar on one chart. This large chart behaves as a broad stroke of a brush. It gives the overall opinion of the market. What are the investors doing? What are the deep pockets doing? Rules 1 and 2 are met on the large chart. You're going to have the advantage of momentum. You're also going to have the advantage of a clear path before you ever look for an entry. And these are going to be what have to happen. Those first 2 rules have got to happen before you look for your entry. Hey, good morning, Samuel. That's okay. Glad to have you in here. Enjoy your time out of the country, and I promise I will be here when you get back. If you can access from out of the country, remember, you can still ask questions from anywhere in the world. One of the beauties of the software, guys. I've been traveling the country with it, teaching you guys how to read indicators. On your small charts, this is your entry chart. Remember that. This is your entry chart. You're defining direction, momentum, and areas on the large chart. The small chart is going to have you identifying that point where the market is likely to continue. And this is your entry for the highest probability trend trade. You're going to refine that one bar on a large chart into 15 or 30 on a smaller chart. It's going to allow you to identify that entry point. Rule number 3 gets you into the market. And by doing so, you're going to be able to reduce risk, and you're also going to be able to maximize your profit potential. So we're going to keep it simple. We're only going to focus on one trade initially. This one trade is going to teach you to read your charts. It's going to teach you to recognize where it's likely to continue, where it's likely to go, and where it's likely to stop. And this basic high probability trend trade is going to open the doors through your chart reading for the trade that you'll probably take more than the high probability, and that's the medium probability. And the medium probability is defined as when most of the indicators line up for a trade. However, a small issue exists. Guys, life is not without issues. Your ability to read your charts from your study on the high probability trend trade is going to have you identifying these small issues. This is going to be the vast majority of your trades. And when you're executing these medium probability trades, you're going to have to manage them assertively. You'll have to take a different approach to exiting the market, to taking profits. You're going to learn to take a portion of your profits off at trouble spots. Your chart reading will allow you to identify those trouble spots, and you'll be able to get to a 0 risk level. But your great entries from the highest probability trend trade are going to increase your chances for success when you take these medium probability trend trades. So we're going to look at the 3 rules, and we're going to put them together. And guys, I actually built a picture this morning. I want to share this with you. I hope this came through clear. This is exactly your path to learning the software, guys. We're going to define trend, and then we're going to define rules 1. And when you're comfortable with rule number 1, you're going to work your way into rule number 2. And when you're comfortable with rule number 2, you're going to work your way into those entries. And guys, don't try to get to the finish line. Keep it simple. Allow it to be simple. Focus on the easiest of the easy initially, And realize that every time you learn one thing, you're building a strong foundation. So we're going to start with the trend. When your trigger lines are two parts, guys, the T3 trigger lines really are active in everything that we do. Your small triggers are these solid lines, and your large triggers are these dashed lines. It's a moving average. The smaller, the faster, the larger, the slower. When your small trigger lines break above the large trigger lines, it's going to paint the background green. When it paints the background green, guys, we're in an uptrend. You're only looking for rules to be met for high probability trend trades long. That's the first advantage that you give yourself trading with the trend. When the small trigger lines break below the large trigger lines, it paints that background red. That red background lets me know that we're in a downtrend, that you're only looking for rules to be met for high probability trend trade short. And I post the question on this picture, what if you never fought the trend? How many mistakes would that eliminate? How many opinions would that remove from the equation? So once you've identified trend, rule number one says that we must have strong trigger lines. Strong trigger lines mean, in an uptrend, that your small triggers are crossed up, your large triggers are crossed up. Both are wide and angled in the direction of the trend. It's the space created between the small and the large that lets me know that the odds are favorable for the market to continue in the direction of the trend. You're going to hear in class all day long, odds favorable momentum. Did you have odds favorable momentum? Guys, look at that odds favorable momentum. Because when you have that look, when the market is likely to continue, you're going to be able to use that momentum to buy or sell a pullback on that smaller chart. That refinement process of the smaller chart looks like this bar. On a large chart, you're going to see these tails, or you're going to see these wicks, and you're absolutely not KM. And when we get to entries, you're going to understand why it is not. Right now, all we're doing is defining momentum, and we're saying that when we have it, this is the most favorable look for buying a pullback to Fibonacci support. Remember that there's three rules that we're working off of, right? And we're using two charts. Right now, we're only on the large chart. We're defining direction and we're defining momentum. In a downtrend, odds favorable momentum has smalls below the large are wide, they're angled in the direction of the trend. This is when it's most advantageous to sell that pullback. But yes, KM, if you waited for this tail to form, the market would be long gone. And that's one of the beauties of the software, is we're going to teach you how to recognize where the bottom of that tail is most likely to happen. But everything that you do, guys, starts with odds favorable momentum. Everything that you do is waiting for that separation between the small and the large, because it means that the market is likely to push in the direction of the trend. When those small triggers return to the large triggers, when they work their way inside of the large triggers, this is what we call a weakening of the large triggers, guys. Anything can happen up or down. That's what that ACH means. Anything can happen. It becomes a coin toss, a crapshoot, right? Everything's going down. We weaken the large triggers. And look, the market reverses. Odds favorable momentum, the market pushes up. Anything can happen. It heads back down. We can gauge the likelihood of the market to continue the trend simply by committing to that odds favorable momentum look. It's going to happen throughout the day, guys. You're going to see it, and then you're going to lose it. And you're going to see it, and you're going to lose it. And sometimes those trigger lines aren't going to agree at all. Sometimes your background is green, but your large triggers, your small triggers are red, which means that we can't have odds favorable momentum, no trades. Sometimes your smalls are up and your large are down. This is your opportunity to hold. And look how the market kind of bounces when the trigger lines don't agree. Consolidation, right? Guys, rule number one is going to keep you from getting chewed up in consolidation, even without the benefit of Fibonacci. You patient, the triggers weaken, the market reverses, and there's that odds favorable momentum again. Rule number one gives you a very distinct advantage, and what you're going to find is that momentum can almost cover mistakes every now and then because momentum is pushing hard. It's like a freight train or a semi-truck going down the highway. All my new people, hey Log, Hammer, KM, S Fits, nice to have you in here. Kiana, guys, is everybody cool with this? Rule number one is going to provide the advantage of momentum. Rule number one, those strong trigger lines, it's the first third of the equation getting you into a trend. Guys, don't be shy about dropping a Y in the room, right? Absolutely, Mark, I'm pretty good with that odds favorable momentum. Let's go on to rule number two. Let's talk about termination conditions. Remember, guys, this is your class. Nobody's going to get smarter being a wallflower. You're not going to shoot a 63 on the golf course by watching videos of Tiger Woods, but getting out there and swinging the clubs, guys. That's what makes the magic happen. Rule number two says that termination conditions must not exist. They must be false. We have to have room to the target. Well, what is a termination condition? Guys, it is an area, a Fibonacci-based indicator that may reverse the market, and it's based on a comparison of those T3 trigger lines in the areas in question. And this is your map for what those areas may be. It can be a divergence high or a divergence low line. And guys, a divergence high line is a magenta line that prints off the top of a pivot when the market goes up and back down and loses momentum. It creates this magenta line. And this magenta line on its own, it's not a termination condition. It's just a line. We're also going to look for Fibonacci resistance. Red resistance, blue support. Again, just laying there out in the future, they're not termination conditions. It's a comparison of your trigger lines in the areas. We're also going to look for one-to-ones. So areas that may reverse the market: divergence high, divergence low, red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. For my new users, this is also a great map of what you're looking at when you open up your software. We're going to make sure that none of these termination conditions are true, making sure that we have a clear path, guys. And it's a simple comparison of the T3 trigger lines in one of those areas to determine whether or not we have a termination condition. Actually, you know what? Let's use this one. Let's do termination conditions at a high point. It's a two-part process. Price reaches an area, meaning that these dynamic Rinko bars, actually, I apologize. I'm going to go to an easier picture. I'm just going to go straight to the manual. These red dynamic Rinko bars in a downtrend with all that momentum come down and reach Fibonacci support. When price reaches an area, when those Rinko bars get to an area, all you have to do is ask yourself, where are my trigger lines? If your trigger lines remain above support or they remain below the resistance that's been reached, you have what's called a termination condition, an area that may reverse the market. It may create an untradeable bounce. It may eventually break, but in the moment, price reaches the area, trigger lines remain above support, no more short trades, because this is an area that may reverse the market. Going the other direction, price reaches Fibonacci resistance, all of your trigger lines remain below. We have what's called a termination condition, an area that may reverse the market. In this particular picture, resistance stops at cold, right? And pushes it all the way back down to Fibonacci support. When price reaches Fibonacci support, you have to ask yourself, where are my trigger lines? If they all remain above Fibonacci support, well, no short trades into support, as well as no trades into resistance. Guys, 90% of what you do is going to be reading your indicators, waiting for advantages. From support, it pushes right back up to resistance, guys, and it reaches that divergence high, two resistances. None of the trigger lines go through. We call this a pivot stop out of a divergence high. The pivot is created where the divergence, where the loss of momentum happens. The stop out happens when price exceeds it by a few ticks and then trades the other direction, guys. On its own, a pivot stop out is a very powerful termination. When it coincides with Fibonacci, it becomes even more powerful. When this termination condition at a high creates a full reversal, gives you odds favorable momentum, that is the key. That's the anchor for the highest probability trend trade that we teach. Go in the other direction. With odds favorable momentum, Price reaches these yellow 1-to-1s. Absolutely none of the trigger lines break through. We have a textbook termination condition, an area that may stop the market. And you can see that it does. Look at the bounce right off of these 1-to-1s. No more short trades, and thank goodness it keeps us safe. Guys, if this termination condition creates a full reversal, meaning that your large triggers go from red to green, meaning that you end up with odds favorable momentum and that clear path, there's one of those tails. There's one of those best of the best entries. That highest probability trade that we teach, that 70 to 80% winner. So when we're looking at termination conditions, guys, you're going to keep it simple initially. I'm going to look at a couple pictures. We're going to look at terminations from highs. We're going to look at terminations from lows. And I'm going to give you that simple equation, guys. Price reaches the area. The triggers remain below when we're looking for termination conditions at a high. In this first one, we have one of those pivots with a loss of momentum. On its own, it's just a pivot with a loss of momentum. Don't give it more power than is warranted, guys. But when price reaches that divergence high, the trigger lines remain below. Now it's a termination condition. And if this termination condition creates the full reversal, we're going to label this as a strong top or a good top. Your highest chance of success happens after a large chart termination creates a full reversal. Price reaches resistance. All of the trigger lines remain below. Even with odds favorable momentum, we know not to take a long into that area because that area may reverse or create a large bounce. Price reacts to Fibonacci. Price reaches resistance in 1-to-1s. Absolutely no trigger lines break through. We're in a holding pattern. We're waiting. You can see that it pushes all the way back to support. Support, none of the trigger lines break. 90% of what you do is reading, waiting to see if that market reverses or breaks the area. From a low, you know what, let me give you this picture. I like to share all my pictures, guys. Please steal them. These are great study pictures. From a low, it's the exact same recipe. Price reaches an area and the triggers remain above the area. If they do, we have a textbook termination condition. Price reaches, triggers remain above, no more short trades. If this termination condition creates a full reversal, the trend goes up, the large triggers go up, the small triggers get above the large triggers, and I get a clear path. Guys, that's your highest probability trade. That is that strong bottom that sets you up for a high probability trend trade. Price reaches support, no triggers through, termination condition. Here's one of those pivots, not a termination condition on its own. When price comes back and reaches that divergence low, triggers remain above. Now it's a termination condition. If this termination condition creates a full reversal, we now have a strong bottom. Guys, is everybody comfortable with this? It's a simple two-part. Price reaches, absolutely no triggers go through. No more long trades into that area. And let me give you this picture as well. I apologize. I'm going to give you all the study materials that I can, guys. I'm going to give you everything that you need to be successful. Your job is to ask questions if you have them. Price reaches resistance. Absolutely no trigger lines break through. The area is not broken. It's not a clear path. Sit on your hands and wait, right? We've talked about when we have a termination condition. Well, when is the path clear? When both the small and the large triggers get to the other side of the area in question, now we have a clear path. Resistance begins to behave as support. We have that odds favorable momentum, and once again, guys, there's one of those tails. There's that best look for a potential trend trade. As you are brand new, first 20 days, only working on entries, guys, let it be simple. Either the path is clear or it's not, right? As you grow with the software, as you learn to read your charts, it's going to open up doors for you. But initially, and I ask everybody this, not just the new people, what if you insisted on a clear path? What if you made sure that there was nothing between you and your targets each and every time you took a trade? Would it make your trading more profitable, guys? The answer is yes. Trading with the trend, right? Trading with momentum, and now trading with the advantage of a clear path. This is your road to success. We're 2/3 of the way. We have momentum via strong triggers. We have a clear path because there's absolutely nothing in the way. Now it's time to turn our attention to the small chart. Now it's time to go to that refinement chart. We're going to take this one bar on the large chart. One bar where we determine the direction of the market. One bar where we determine the momentum of the market. One bar where we determine whether or not there's areas in our way. And it's going to refine down to 15 or 30 bars on the smaller, faster chart. And KM, this is where the magic happens. This is where we can identify where that tail is most likely to stop through this refinement process on a smaller, faster chart. And we're going to do this with rule number 3. And rule number 3 says that we're going to use a limit order. And guys, if you're not familiar with limit orders mean that we are going to wait for the market to come to us. And we're going to use a limit order to buy or sell a pullback, meaning that we're going to take a small retracement in price that's counter to the underlying trend. If the market is railing to the upside, guys, we want it to come down. And if it's going to the downside with odds favorable momentum, we want it to come back up to our limit order. So we're going to buy or sell a pullback, a small retracement in price, and we're going to do it at an area inside of favorable large triggers. And that's your rule number 3. Use a limit order to buy or sell a pullback inside of favorable large triggers. When your rules are met on the large chart, this is the look on your small chart. Everything is up on the large chart. The momentum is there, the path is clear, and your small chart is going to mimic that odds favorable momentum. Small's outside of the large should be wide, angled in the direction of the trend. But on your small chart, there's 2 large triggers. There is your 5-1 large triggers, which are smooth, but you're also going to have what we call a synthetic trigger. And your synthetic trigger is nothing more than the large trigger on your 13-2 chart. So your small chart large trigger and your large chart small trigger or large trigger are going to work together. They're going to help you identify that area where the market is most likely to continue. And this is what we call favorable large triggers. When those 2 overlap, when they're strong, angled in the direction of the trend, this is your most advantageous look. This is when you're going to have the smallest window of opportunity, which is going to create the least amount of risk. And remember that our rule says that we're going to buy or sell a pullback at an area inside of favorable large triggers. So when everything is going up, look for your areas, fibs, midbands, 1-to-1s, yellow 1-to-1s. And they need to be inside of these triggers that are screaming to the upside because of the momentum. But our rule says that we are going to buy a pullback in this uptrend, which means that we're going to let the market come down to us. We're going to wait for a reversal bar. And at the time of this reversal bar, you're going to create what's called the window of opportunity. And the window of opportunity for a long trade is going to extend from your highest point of support to your lowest point of support inside of favorable large triggers. And in a downtrend, when you're looking for a short trade, it's going to be from your lowest point of resistance to your highest point of resistance inside of favorable large triggers. This is where the magic happens, guys. We're pinpointing where the market is likely to continue, and your job is to right-click on that chart and activate a limit order. Wait for the market to come to you. And if it does, you're going to find yourself in a long trade. You're in a long position now. And you're in a long position because the equation is met. The only thing that you're in control of is whether or not your rules are met. So let there only be 2 options. Either the rules are met or they're not. You have the advantage of momentum through the strong triggers on your large chart. You have the advantage of a clear path because there were no termination conditions on your large chart. And then you refine that broad stroke of a brush to define where the market is most likely to continue, and you took your entry. You're in at 79.21 at the top of that window because of the momentum, at the top of that window because of all the factors in place. Your initial stop, your protective stop, is going to go below that window of opportunity. And guys, this picture shows how I define that window of opportunity, and I'm going to show you real quick. We'll start fresh on this picture. You can use a shape tool during the market and go from your highest point of the triggers to your lowest point of the triggers, because we know without a doubt that our areas must reside inside of favorable large triggers. But that's not your window. Your window, you can refine down, goes from your highest point of support to your lowest point of support inside of favorable large triggers. This is the window where the market is most likely to continue. This is where your advantage holds true. You're in at 79.21. You're in at the top of that window. In every trade you take, guys, I want you to expect that that market may go to the bottom of the window, to the bottom of those large triggers. Lenny, you see how this could have helped you out a little bit if you're still in here? And then your protective stop, because remember, anything that wins 70% of the time, 80% of the time, is obligated to lose 20 to 30% of the time. Your protective stop will go where that market shouldn't go. It'll go where, if the market continues beyond that window, we no longer want to be in the trade because we no longer have the advantage of that entry where it's most likely to continue. And if it does, it's going to hit that stop, guys. It's going to minimize your losses. We don't trade on hope, right? We're very pragmatic. With momentum, with a clear path, we wait for a reversal bar. At the time of the reversal bar, we define a window of opportunity. Protective stop below the window of opportunity. And guys, this is a trade that I'm taking 1,000 out of 1,000 times. I'm going to study it so that I can have the advantage. And this is a trade that typically wins 70 to 80% of the time. 70 to 80% of the time, guys, it's profit target reached. This is your best of the best, a high probability trend trade that happens after a termination condition on the large chart is your best chance of success. After the market pivots up, I'm going to reduce risk below that reversal bar. Because I waited for the pullback, that risk is minimized, the profit potential is maximized. And then KM, to get into your question regarding the tail and won't the market be gone? Absolutely it will. We're going to use this tail, guys, historically to recognize, to go back to study the look, to verify the rules. But this tail, the bottom of the tail, should be your area inside of favorable large triggers. And if you wait for the tail to form, absolutely, that market is gone. Does that make sense, KM? Did that kind of clear it up a little bit for you? We use that refinement chart to identify where this tail is most likely to happen inside of those favorable large triggers. Guys, this is your highest probability trend trade. This should be your first 20 days, and I don't want you worried about anything other than grabbing that awesome entry, because when you learn to grab that awesome entry, it creates very manageable trades. The ES is kind of railing down. I'm going to see if we can find an example. This is crude oil. And crude oil hit a termination condition, and then it kind of validated and verified that termination condition with a loss of momentum. The trigger lines don't break through that 1-to-1. This termination condition creates a full reversal of the market. The larger down, the smaller down, the trend is down, and there's space between the two. I have that odds favorable momentum. The tail and the large chart. Yep. So watch this, Hammer. Are you ready? Guys, news in 1 minute. Hammer, if I come to my large chart, and this is how we're going to study. Check it out. If I circle that tail, watch my 5-1 chart. Boom. Right to resistance, right inside of favorable large triggers after a termination condition on that large chart. This is your study tool, guys. This is how you're going to learn to build trust in the look. So I'm going to take a picture. I'm going to get that large chart, the small chart. I'm going to line up timestamps. I'm going to line up entry areas. And I'm going to go through that arduous process. And I'm going to write out rule 1. Did I have odds favorable momentum? And I'm going to verify it. Absolutely. And I'm going to write out what is rule number 2. Rule number 2 says no termination conditions, right? I like it. I'm also going to recognize that a termination condition created a full reversal, and I'm going to get in the habit of labeling this. This is a good top or a strong top. Either one works. I like strong because it creates confidence. And then my final rule says that I need a pullback to an area inside of those large triggers, right? And guys, there's your rules-based trade. This is all you have to study, guys. Give it 20 days. Let's do it. This is crude oil. I'm going to scroll back. There's a small tail. And Hammer, do you see it? Odds favorable, everything's screaming, right? That's that momentum that gives the advantage. That one didn't quite make the mid-band. But do you see how this tail is this pullback? It just didn't make it. Hammer, you probably didn't get into this trade. And that's okay. Trading's like buses. Here's a termination that creates a full reversal. There's one of those tails right at the beginning of the odds favorable momentum, but my trigger lines didn't break through the areas yet. Hammer, do you see how? I'm not going to circle that one. But from 1 to 1 straight to Fibonacci, look at how consistent these fibs are. And then here's a little pre-market middle of the night stuff. And let's check a different market, because Hammer, you can use this not only to go back and determine if rules are met. There's that news going through. You can also go back at the end of the day and you can determine whether or not opportunities were present, right? Look at this. Termination creates a full reversal. Full reversal gives odds favorable momentum. Let's circle a tail. This is NASDAQ. NASDAQ moves like a scalded dog. Your first pullback goes right to the midband, right there at the trigger lines. It's a pretty big stop on it, isn't it? Ultimately, the market goes down. Guys, this isn't the best look. And sometimes you have to be okay with that. Sometimes it's just not the best look. Divergence creates a turn. The turn gives us odds favorable. We'll go take a look at it and see what this circle looks like. But Hammer, I do this every day. I come back and I study and I look at these pictures and I see if there was an opportunity. And I'll take a million pictures. Do you see how the small triggers are through and the large triggers are not? This is going to be one of those medium probability trades, guys. And this is a pretty important one because look at that pullback directly to support inside. And what did the one below look like? Not so pretty, right? So sometimes we have to be patient, wait for the best of the best. And guys, this is one of those looks. Let me see if I have my termination conditions up. Nope. Everything that we talked about initially was the high probability trend trade, right? Everything that we talked about was the best of the best, getting that perfect look, every advantage on every chart. But I told you that your ability to read charts is going to take you to that medium probability trade where there is a small issue. This circle that we just did on the NASDAQ is an example of that, guys. And this is what we call a 50-50 trade. 50-50 has nothing to do with your chance of success. 50-50 has everything to do with the position of these trigger lines versus the area. We know that if price reaches resistance and absolutely no trigger lines go through, we have to sit on our hands, right? We have to wait to see if that area breaks. As a brand new user, you're going to let the small and the large break through the area to give you that clear path. When you learn to read your charts a little bit, when you can gauge what they're doing in the moment, you're going to find this, look, when the smalls smash through with that odds favorable momentum. Remember, momentum creates a huge advantage. When the smalls break through but the large do not, this is what we call a 50-50 look. The smalls, 50% of your triggers have cleared the area, 50% have not. 6980 has the potential to break, but because it hasn't broken completely, this is not a clear path. Is everybody comfortable with that idea? Smalls through, large below, you need odds favorable. This area has the potential to break. Strong triggers break things, guys. But look at this. Smalls are through and the large are not. Another one of those 50-50 looks. And this one ends up going up. So when you have that 50-50 look, when you have the potential to break but it hasn't broken yet, it's not a clear path, which means when we look at the equation, a small issue exists. And a medium probability trade says that most indicators line up for a trade, however, a small issue exists, which means that if we have a 50-50, we're not going to sacrifice momentum. And if we have a 50-50, we're not going to sacrifice that entry area. We're going to make sure that these other two advantages are in place. This picture right here on the NASDAQ is the 100% ideal 50-50 trade, and I'm going to show you why. The smalls have broken through the area, but the large have not. There's no divergence on my smaller chart, which means that there's no slowdown. I'm not forfeiting that advantage of momentum. I have strong trigger lines on my smaller chart, which means that I'm confirming the momentum on my large chart. And guys, my window of opportunity is 2 lines wide. It's a small risk endeavor. There's my perfect entry, and there's my easy winner. So guys, this is a 50-50 trade, and it requires a different set of rules. This will be your first medium probability trade. It's a great opportunity to make money. And if we go through the bar by bar on this, right? The smalls are through, the large are not, it's 50-50. Everything says up on the small chart. I'm going to take away our cheater circle real quick. And I want you to see just how easy this can be when you study. Everything says up, the smalls are through, the large are not, the momentum is in place. Everything says up on your smaller chart. And we're just waiting for a reversal bar. And there it is. Your reversal bar on your smaller, faster chart. At the time of the reversal bar, we're going to identify a window of opportunity. I can use this drawing tool and I can go from my top of the triggers to the bottom of the triggers, and I'm looking for the areas that fall within. I have yellow 1-to-1s and I have a mid band. So watch how this window decreases from the highest point of support to the lowest point of support inside of favorable large triggers. This becomes the area where the market is likely to continue. This is the area where I'm going to activate a limit order right at the top of that window. This is where I want to enter the market, where it's most likely to continue. And as the market comes down, I'm now in a trade right there at 79.50. And my protective stop goes outside of that window where the market shouldn't go. And one of two things are going to happen at this point. It's either going to come down to my stop, I'm going to take a loser, it just didn't work, or I'm going to get a reversal bar. And at the time of this reversal bar, I'm going to minimize my risk below it. And I'm in a trade with the advantage of momentum, that entry area, but I didn't have a clear path yet. So it's a 50-50 trade. It has to be managed a little bit differently, which means that on this 50-50 trade, if something like divergence prints and the triggers don't break, this is my opportunity to exit the trade, to manage the trade assertively. Does that make sense, everybody? Your first trade is the high probability trend trade. Your first trade is the absolute best of the best. Embracing the advantages and just learning how to identify an entry. Everybody cool with that? From that 50-50 trade, you're going to end up on a medium, or from that high probability trend trade, you're going to end up on a medium probability trade, that 50-50 trade where everything has the potential to break, but maybe hasn't broken yet. Guys, I'm going to give you a high probability trend trade checklist. This is for my new users. Haylog, Hammer, KM, SFITS. Who else is in here that might need this? Anybody and everybody, guys. This is for you. This is a checklist so that you can police yourself every time you take a trade on the simulator. This is a checklist so that you can begin to associate the rules with the looks, right? This is what you're going to write on the chart. In order to take this trade, these rules must be met, guys. It's mechanical, it's pragmatic, it's methodical. I'm also going to give you the exact same checklist, but guys, I will liberate from the resource materials all day long. I'll steal your pictures all day long. Here's that same high probability trend trade checklist. And guys, at the top of these checklists is the link to a video that's going to talk about tops and bottoms, areas that may or may not break. But I stole pictures. What's a good top or bottom? It's a termination that creates a full reversal. Here's your odds favorable momentum defined in pictures. There's your clear path. There's your not clear path. And here's your identification of the window of opportunity. Guys, this checklist is going to help keep you safe. I've never had anybody commit to this checklist and do worse than 70% winners. And then I'm going to give you one more gift, guys, as we go into the second hour. I'm going to share with you a simple plan for consistency. This is a plan that came to be. I had a gentleman call me on the phone one day, and he says, Mark, I'm losing my ass, pardon my French. He goes, I'm trying to catch trend trades. I'm trying to catch counter trend trades. I'm trying to catch high volume area trades. I'm trying to get into momentum trades. And really, I'm just making stuff up. I don't have a clear path, Mark, and it's killing my trading. And I said, well, then let's refine and let's refocus. And guys, this is my invitation to everybody in this room. If you're brand new, this is your focus. If you are coming back and you're trying to get into the groove, right? You're coming back and you're like, I need to win more than I lose. This is your plan for simplicity. And the first thing on this one, guys, and it's in big bold letters and underline, never fight the 13-2. Never fight the large chart direction. Never fight the large chart momentum, guys. Just the elimination of that from your day is going to create all sorts of advantages. Use the phrase, personalize it. My trade is the high probability trend trade checklist. Guys, in order to take this trade, the conditions must be met. The rules must be met. My only option as a brand new trader, my only option is somebody that's coming back and looking for consistency is either the rules are met or the rules are not met. And if the rules are met, I'm going to hold myself accountable to entering that market no matter what my emotions tell me. This is a pragmatic, mechanical approach to getting into the market. I want you guys taking a lot of pictures. Take a picture of what your short entry looks like. Take 10 pictures and work them into this plan. Make this plan yours. When I have odds favorable momentum, when there's absolutely nothing in the way, I'm going to look for an area of resistance inside of favorable large triggers. This pattern repeats itself every day, every market. You're going to take that picture, you're going to put it into your trading plan, but more importantly, you're going to drop it into your spreadsheet every time you take that picture. The rules are met, you've written them on the chart, put it into your spreadsheet, guys. I'm going to share mine one more time with you. If you didn't steal it the first time or the second time, steal it this time. Make this spreadsheet yours. Go through and click on every one of these great entries. Do the same thing on long entries. Your trading plan should have at least 5 to 10 pictures of shorts, 5 to 10 pictures of longs, annotated charts, because what you're doing is you're creating confidence through the memory of success. You're creating recognition through repetition. You're going to learn to manage your trades. Every great entry has a management opportunity, right? Every great entry is going to give you the opportunity to get out of the market as well. The same way your mechanical approach to entry is going to be advantageous for the new user, for the person looking for consistency, that same mechanical approach to management is going to give you that same advantage, guys. Your initial stop goes outside of the window of opportunity. It goes where the market shouldn't go. If you take the perfect entry, mid-band, inside of favorable large triggers, you can identify where the market shouldn't go outside of that window of opportunity. Guys, when you take your entry, here's your stop. The only thing that's going to happen is you're either going to get your stop hit, right? You're going to take a loser. Anything that wins 70% of the time has to lose 30% of the time. We don't grade it on just one trade. Take 20 trades, take 40 trades, look at your percentages. Or you're going to get a reversal bar in the direction of the trend. And if you get that reversal bar in the direction of the trend, mechanical, methodical, no opinion, right? If then my stop goes 2 ticks above that reversal bar, and there's nothing for me to do. Either this trade goes to my first profit target at $100, or I get stopped out for a small loss. Guys, I can't stress it enough. Small losers are a natural and normal part of a positive equity curve. If anyone ever tells you that you'll never lose a trade, they're lying to you. I'm just going to tell you that right now. But we can manage our risk with that window of opportunity. We can manage our risk with that reversal bar. Nothing to do, either a small loss or the first target. And guys, if your first target gets hit, you now have $100 in your account. They can't take that from you. You've exited one contract. There's $100 in the account, and you move your stop to break even. You have zero risk on this trade. The money was made. The dopamine is real, right? Confidence coming through that memory of success. Nothing to do. You either get stopped out, break even, or your second target of $200 gets hit. And if it does, guys, that's a $300 winner. That's one trade. Every advantage, $300. Do that twice a day, right? That's a $600 day. That's not bad. Take 3 trades a day. Win 2, lose 1. We'll call it a $400 day, $200 per contract. Guys, that $400 day turns into a $2,000 week. That $2,000 week turns into an $8,000 month and a $96,000 year. The idea, new users, is to keep it mechanical, keep it methodical. Give yourself a proven plan that wins more than it loses. And what you have is something that can generate revenue, but it takes patience. You're waiting for the rules to be met, and you're mechanical, methodical. When you're comfortable with your entries, guys, and it's key that you're comfortable with your entries from that highest probability trend trade, that's where your first medium probability trade comes into play, that 50-50, right? Smalls through, large not, odds favorable. You're going to use a different checklist for that 50-50. Are both charts strong? No divergence on the small chart. And guys, from a good top or bottom, fixes a lot of problems as well. If you have these conditions met, you're going to enter at the area. But because it's 50-50, it has to be managed differently. Notice that it says on the checklist, if divergence is present, no trade. Not going to forfeit momentum when we don't have a clear path. Your initial stop is still in the window of opportunity, still using the reversal bar. But now you have a new management condition. If divergence prints, you're going to exit the trade, because if you wouldn't enter with divergence, why would you stay in? Your first contract is at the trouble spot, usually the area that you're anticipating breaking. Your second contract, you're looking for that $200, right? We're not hitting home runs, we're hitting base hits and letting those add up. Guys, I'm going to give you this KISS trading plan. I'm going to encourage you to use it, to use these checklists. To keep yourself focused, give yourself every advantage. When you get into the market, learn to read your charts, learn to understand when a termination condition creates a full reversal, it creates an opportunity. There's one of those 50-50 trades. Smalls are through, large or not. You do have strong triggers. You do have divergence, though. A lot of you won't take this trade from support inside of favorable large triggers. A second lower management means that we got a good chance of pushing lower. Notice that your smalls are inside of the large. You're losing momentum on a 50-50 trade. And sure enough, it just pushed down, right? Rules are designed to keep you safe. If we scroll back to 10-11, what did this 50-50 trade look like? Or was it a 50-50? Yep, it was. There's my circle. First one with no divergence pulls you right back to the mid-band inside of favorable large triggers. And when divergence prints, it gives you an opportunity to manage out of that trade before you take a loss. Once again, it's methodical, it's mechanical, it's pragmatic, it's emotionless. Gauging advantages, taking those pictures, participating in class, giving yourself the absolute highest chance of success, guys. That's what we want each and every day. And that's what we're going to do every day in this classroom. And I went a little slower today. Wanted to make sure that we're there. So guys, I'm going to ask you, you've been a little reluctant so far. Paylog, the hammer, KM, S-Fits. How are we doing? Are we comfortable with what we're talking about right now? Remember that the path isn't being an expert in day one. The path starts with just understanding which direction the market is going. Guys, we've made it easy for you. It's color-coded. When you have that direction established, let's make sure that we have the advantage of momentum. Identify those strong triggers, guys. Go back on your charts and just take pictures of strong triggers. That's the first piece of the puzzle, the first bite of the elephant. Open up your largest chart. If you right-click on that chart, you can take everything off of it. You can run only 2 triggers, which means that you can go through and go, hey, look, that was odds favorable momentum. Take a picture, post it in class. Mark, am I reading this right? That looked like the best of the best. Hey, Mark, this looks like the best of the best as well. I'm noticing one of those tails. Guys, you can scroll back 10 days worth of data and just get comfortable identifying odds favorable momentum. Once you're good at it, you're going to start working on the process of understanding termination conditions, identifying where the market has the potential to stop, keeping you safe, keeping you from trading into those areas. So you're going to right-click on your chart again, and you're just going to load the template back onto it. You're going to put those areas back on the chart, and you're going to continue the process of study, getting comfortable with the idea that when price reaches an area or one of these divergence highs and the triggers don't break, no more trades when price reaches support and the triggers don't. It's just on your hands. S-Fits, it's great to have you here on your second day. You're going to get better and better every day. This is a process, and I try to teach it as a foundational approach, and I want you to encourage the fact that you're new, right? Be okay with it. We're going to do it incrementally. We're going to understand trend. You're going to focus on momentum. You're going to work through those termination conditions. And ultimately, you're going to start nailing those entries, right? This is how you speak. I love it. Eventually, those entries are going to come into play, guys, and then it's just practice. Every day, practice. Every day. Making sure that the advantages are in place. Every day. Posting your trades in class. Filling up that spreadsheet. Hayden? I have a son named Hayden. Close to yours, a little different. Nice to have you in the room. Great name. I agree. So this is your path, Hayden. This is your path, S-Fits. Hammer. Embrace the idea that the more you post in this room, the quicker you're going to get to where you want to be. The more you use that spreadsheet and go back and study it, the quicker you're going to get to where you want to be. The more that you simulate, the more you practice, the more you annotate, the quicker you're going to get to where you want to be. Keep it simple. You don't have to catch every trade. You only have to catch the best trades. And this is your path to success. So guys, that's our first hour. I drug it out a little bit today. We went an hour and a half today. I'm going to take a quick little break. I'm going to refill my water, stretch my legs. Do the same, guys. Stand up, stretch your legs. It's important to do that every now and then. Look at the markets. What are they doing? Take some pictures, right? 50-50 trade with divergence once again, and it produces a loser. Remember, I'm going to give you the plan for simplicity. Man, break everything. I love that you said that. I'm a big fan. How do you know where your limits are if you don't go screaming past them, right? But don't abandon this, guys, to minimize your learning curve. Break everything, right? but post it in the room. Your wins, your losses, your questions. If you win and the rules are wrong, you have a short-term victory, long-term failure. Guys, how are you going to know the difference? I'm going to tell you. We're going to talk about it each and every time. You need that feedback. You're not risking anything. Guys, the platform that you're using right now is free. Show me a picture, Haylog, Hayden. Can you show me a picture? Were you here for with the capture software? And there's a couple different things that can do it. It may be a little challenge with the data. Maybe I rebuilt everything. You may be 5 days back. I may be 10 days back. Whoa, you almost got it. That's a tiny little picture. Yep, so you're on 8. No problem. Not necessarily. Seeing your charts and how they're different would help me for sure. So when you use that capture software, left click in the top left corner and drag it all the way down to the right and then release. And that's going to give me a big picture. That's going to give me a full picture. Well, here's my NASDAQ. What we were just looking at though, Hayden, is we were looking at the S&P. Oh, you're on the 13.2 NASDAQ. And then the 5.1. Ron, good eyes. Thank you for that. So Hayden, my NASDAQ is a 34.5 and a 13.2. So you're actually looking at different time frames than I am. And if you get with Jason in tech or talk to your salesperson, what they'll do is they'll direct you to the resource page, and I'll show you where to do it if you're comfortable. Download the indicators. No worries. Oh, I missed it. I'm sorry. If you go to the resource page and you download the indicators, there's going to be a NASDAQ template in there that's going to give you that 34.5, 13.2 template. It's going to give you the workspace, and it'll get you and I on the exact same page. And if you need help with that, and guys, this is for you new guys for sure. If you need help with anything, with your software, what you're running, any of that stuff, down at the very bottom in the Discord page is tech support. Guys, this is Jason, and he is phenomenal. The only stuff Jason can't fix is things that aren't broken. Go down and put in a ticket. He will fix what ails you in just a matter of seconds compared to the 20 or 30 minutes it might take me to do it. So that may be part of what's going on, Hayden. So get tech help if you need it, or download those resources, get those new indicators on, and it's going to help you out a lot. All right, guys, I'm going to take just a few minutes. I'm going to pause. If you have a question, post it in the room. If you have a picture, post it in the room. The second hour, guys, the third hour, are revolved around looking at the pictures that you guys post, talking about the advantages, the disadvantages, talking about the entries, the exits. My job here is to help you read these indicators. Your job is to present so that we can see what you see, so I can kind of recognize the patterns in you, and we can work together to put you on that path to success. Guys, I'll be back in about 5 minutes, and we will get this thing going again. Back in a sec. And you want to see something pretty amazing? This was an unintentional lesson on the power of Fibonacci. This yellow line right here, that's the one that we drew in, guys. All the way back here. And look how the market reacts to it. Guys, this is what Fibonacci does. When you open your software, it measures all these swings in the market. It measures all of these different things going on. The ups, the downs, it's the psychology. And these strong key areas are going to be highs and lows, right? They're going to be areas of resistance and support. You've heard the old adage, sell high, buy low. You now have the ability to know where high and low is. You can see the termination. The termination condition is in the process of creating a full reversal. And if we start getting through here, we're going to have a clear path, right, to the downside. All these things coming into place, all these advantages coming together. So I'm going to go through and I'm going to scroll to the top, and I always show this, guys. This is my process for getting to your questions, is I have to scroll to the top of the room, looking at the pictures, looking at the questions, and then I scroll back down to answer whatever needs to be answered. If I miss a question, I apologize. And I want to make sure that you post in there and say, hey, you know what, Mark, you missed my question. Can we talk about it again? And I'm going to start at the very top of the day. John Novak actually got us going, sharing his lessons, which I think is pretty amazing when the CEO comes in to talk to us. The two precursor looks for trend trades, guys. Divergence and then strong triggers. From a termination condition is best, but that divergence turning the market creates advantages. And then when Fibonacci breaks, when the small and the large get through and it pulls back to those strong triggers, right? Guys, these are pictures. This is at the top of the room. Steal it. Look at it. Take care of it, right? Make it yours. And then we have a picture here. Medium probability trend trade. Termination, right, creates a full reversal. Full reversal provides odds favorable momentum. Odds favorable momentum gives a pullback to an area of resistance inside of favorable large triggers. And you can see that she takes profits right there at Fibonacci support. Safia, beautiful trade. And it's such a beautiful trade that I'm going to copy her link, her screencast link. And I'm going to pull up my spreadsheet. I'm going to scroll over a little bit, and I'm going to put Safia's perfect short into my spreadsheet. I'm going to click on link down here, and I'm going to create a hyperlink so I don't have to have that big screencast address. And there we go. Now I can go back and I can study this each and every time. And then this goes back, this was from John Novak, this just kind of reiterates. There's your termination with a second lower divergence, strong triggers. There's the trend trade, the same one that Safia took. Nicely done. And then your ability to read indicators. Thank you, Safia. I'm stealing your stuff for materials. I'm going to teach a class with that. Guys, your ability to read your indicators is going to allow you to change your plan, right? I've provided you a very simple plan initially, something that keeps you focused. But I want you to see this. This is Ron. Ron has odds favorable momentum and he has a clear path. Everything says down, everything is strong. There's absolutely nothing in the way, and he has devised a plan for himself to get in and to get out before trouble. He utilizes momentum and a clear path, those first two advantages, and he's created his own scenario for entry. It's just chart reading. It's a great trade. Every chart agrees the path is clear. Guys, you're going to create your plan, right? You're going to start from the foundation. You're going to start at step one. You're going to drink from that proverbial fire hose. And then as you learn to read the indicators, you're going to find things that are comfortable for you, right? You're going to find things that make you happy, and that's going to become your plan. Everything says down. Price pulls back. reaches Fibonacci resistance. This is an area likely to hold. And then it pushes the market down. And then there's your trend trade right there, guys, to take it to the downside. John, thank you for that picture. Let's find some trade pictures. All right, Gary got us one here today. Gary, termination condition, right? And this midband is not behaving as a termination condition. This is a small chart. That midband is nothing more than a pink line doing nothing because we have a termination condition. Guys, midbands behave as termination conditions. This is a great picture because what it does is it gives me an avenue for a lesson. When is a midband a termination condition? Well, first and foremost, midbands are termination conditions on large charts, on your biggest chart. It's where we define those areas. If price reaches a midband on the large chart and the large triggers remain a full bar away, this is what we call the gap theory. Price is likely to pull back to those large triggers. So this is when a midband is going to behave as a termination condition, guys. This is really the only time that a midband is going to behave as a termination condition. If on your large chart price reaches that area and the large triggers remain a full bar away, so if we look at this picture, whoops, that midband is a small chart midband. It's not really doing anything for us there. But the termination condition over here on the 13.2 is very real. Nice picture, Gary. All right, let's see who's next. All right, and Lenny, we talked about yours, right? Why did it reverse? Guys, I want you to brace the idea that the market's going to reverse for no reason sometimes. Doesn't matter. And Lenny, I hope you're all right with this. If you're not, we're going to work through it together. But let's take a picture. And this is kind of one of those cool things that we can do, guys. And this is why I give you those checklists. All right, so here's our 50-50 checklist on Lenny's picture here. Let's bump it up a little bit so we can see it. Oh, absolutely. All right, do we have odds favorable momentum on the 13.2? Guys, these checklists are designed to keep you in the habit of following these rules, right? The answer is, without a question, yes. Smalls are outside of the large on the 5-1. Without a doubt, yes. No divergence on the 5-1. Once again, we're checking yes on this one, right? I can't tell, but we're going to assume that it was from a good top, a termination that creates the full reversal. So guys, with all of these right, let's create that window of opportunity. From the bottom of the triggers to the top of the triggers. Lenny, I don't know why you don't have synthetics. That's okay. And then from the lowest point of resistance to the highest point of resistance, guys, the rules-based entry was right about there at 62, and the rules-based stop was right about there, waiting for that reversal bar. So the checklist, if you go back after, right, what happened? The question was, Mark, why did this reverse? I'm always going to go back to the rules, and I'm going to look at your pictures, and I'm going to compare to the rules. And I think that the one thing that would have changed your entire day on this trade, whoops, is had you embraced that rule number 3, entering at the area inside of favorable large triggers. It creates a manageable trade. It gets you in at the right spot, and it keeps you from getting out at the wrong spot. So great picture, Lenny. Thank you for this. Get in the habit of using these checklists from the beginning, guys. Get in the habit of giving yourself that advantage. And eventually what's going to happen is it's just going to start to resonate in your brain over and over. Your rules, as you look at the chart, you're going to talk them through in your head, right? You're going to open it up and you're going to say, I have a termination condition, but it hasn't created a full reversal because the large are down and my small are up. So I don't have odds favorable momentum. Rule number 1 isn't met. And price reached resistance and none of the trigger lines broke through. So rule number 2 isn't met. So guys, it doesn't even matter what's going on that smaller chart because right now I don't have momentum or a clear path on the large chart. And you're going to train yourself to talk it out every time, to have this conversation with yourself each and every time. Remember, 90% of what you do throughout the day is sitting on your hands waiting for advantages. And we can say to ourselves right now, in order to take a trade, either resistance has to break with odds favorable momentum to the upside, or support has to break with odds favorable momentum to the downside. So it becomes a little bit of a holding pattern, right? Just a little bit of sitting on our hands and waiting for the advantage. And this is your day, all day. This is what I see, doesn't match the rules. This is what I see, are the rules met? And if you get in the habit of that, each and every time you look at your charts, guys, you're going to be reinforcing those rules back and forth, over and over. So let's take a look. M, I believe this was you. Termination creates a full reversal. Full reversal gives odds favorable. Odds favorable gives a pullback, and dag nabbit, it doesn't quite hit the mid-band. Maybe you didn't catch this one, right? But guys, this is a great picture because what is this picture doing for us? It's identifying the termination. He knows where he was looking. Beautiful circles. And he knew where he was going to take profits if he got an entry. M, this is beautiful. This is a great read all the way through, start to finish. Nice job. You don't have to take a trade to be a little bit smarter, guys. Take a trade. Tell me what you see. We'll get you there. Carl. Good morning, Carl. Termination creates a full reversal. Full reversal creates odds favorable momentum. And there's one of those 50-50 trades, right? 50% above, 50% below. Divergence prints, so we're losing a little bit of momentum without a clear path. That's okay. Beautiful entry. Right here creates a manageable trade. Move your stop a little quick on this one, guys. Carl, do you see it? You just got your stop just a little too soon. You didn't give that trade any room to work, but you did get back in. And since you already had one divergence, you're taking quick profits. Everything still looked good. You got in and you got paid at divergence. Nice. No reason to get stopped out on that first contract, though. Nothing had changed. Nice trade, Carl. Great entry on the first one. Bobby T. Let's see what you did, my friend. Bobby says termination creates a full reversal. Full reversal gives odds favorable. Odds favorable has a clear path. Clear path has the perfect entry at an area inside of favorable large triggers. I think your stop's appropriate. Right outside of those large triggers, Bobby. Guys, this is the most valuable lesson that you're going to get today. Are you ready? I'm going to steal your link real quick, and then I'm going to make this larger. This is the most valuable lesson that you're going to get today. Everything was a yes, right? Everything was met. Every rule was met. Every advantage was in place. 100%. If you took this trade 100 times, the exact same conditions, is there a realistic expectation for success? Guys, I think that if you took this exact same trade, this rules-based trade, you're going to win 70 to 80 out of that 100, right? So what's the flip side of that? 20 to 30% of the time, there is going to be a cost of doing business. This is paying your rent. This is your light bill. 20 to 30% of the time, the most beautiful trade in the world isn't going to work, guys. And you have to be okay with this. You have to develop the trust to tell yourself the advantages were there. It just didn't work. Bobby, I would lose this trade 1,000 times and never feel bad about it. So much so that I'm going to go in and I'm going to put your picture into my spreadsheet under a rules-based perfect entry. And I'm going to call it perfect. I'm going to get Bobby T's. Perfect high probability trend trade short. Didn't work. Doesn't mean that it was a bad trade. There was nothing wrong with it, Bobby. It was the perfect trade. And I'm so glad that you posted this one because, guys, as you develop trust with the software, what if this same look set up 5 minutes later, Bobby? Would you take it again? Or would you be hesitant because the trust isn't there yet? And guys, I'm telling you, taking a loser in the beginning, it's going to shake you a little bit. If you use that checklist, it's going to help sort it out a little bit. It's going to give you that confidence. You're going to know that you had a statistical advantage, and you're going to get back into the fight. You're going to wait for those rules to be met again, and you're going to take that trade. And that's the goal, building trust. Safia, let's take a look. Using the checklist, termination creates a full reversal creates odds favorable. Egads and little fishes, Safia. That's the perfect short. For me, Jay Solar, if I say the perfect trade, I'll stop saying that because I don't want to confuse anybody. So the perfect trade, what does that mean? Rules met. That's all I mean. Jose, when I say perfect trade, I mean that the rules were met. That's it. If I can go through my checklist and it's perfect, it means that I had everything that I needed. You got scared and moved your target. What scared you? So, Safia, your job is when you get scared. Okay. So how do we develop confidence? I'm not picking on you here. We develop confidence and consistency. This checklist is your entry, right? All that checklist is your entry. So let's talk about the management and ask yourself every time you take a trade that you get out of too soon, what changed? It's that magic phrase, right? And that's okay, Safia. If you get a little freaked out in the moment, that's cool. But what changed from this moment right here? Let me not make that pink. From that beautiful entry with virtually no risk, did your trigger lines change? Not at all, really, right? Your small trigger lines actually started to turn towards the downside, wouldn't you agree? So if anything, it got better. In the moment, you're not going to recognize this. In the moment, you're so excited about it and your adrenaline is so high that you're not going to go through that process. What changed? What changed? When you take a trade, what changed? When I hit these small triggers, what changed? Nothing. Everything still says down. As I begin to move and approach that divergence low, what changed? Nothing. Now everything's railing. Guys, entries create manageable trade. Management's the second piece of the puzzle. It got choppy. No, it's not. That's why she identified it as a medium probability trade. So Jose, she didn't have odds favorable momentum, which is why she identified it as a medium probability trade. Her small issue was that the momentum wasn't ideal. All right. Safia, you're calling a 3-tick fluctuation on your small chart choppy. Let's take a deep breath away from the excitement of the trade. Is that really choppy? Or is that just a little fluctuation because the market rarely straight lines? No, you're okay. But this is why we do it, right? I think words are very important. Guys, I'm an English lit major, and I really do think words are important. Choppy has a negative annotation, doesn't it? Choppy induces fear. Let's find choppy real quick. I'll show you what choppy looks like. But this is what this class does. When you talk about what you see, we talk about maybe a different way to look at it, right? To build confidence. Safia, that's choppy, isn't it? Up, down, triggers don't agree, divergences above, divergences below, synthetics down and flat. These are large. Let's identify this as choppy. Does that make sense? For everybody, not just Safia. Let me put that in the room. Guys, that's a good one for your chart reading. And then I want to show you something when that chop is over and everything agrees, and this is a smaller, faster chart. There's a 4-tick fluctuation. There's a fluctuation, right? Your small chart within the bar is going to have these little fluctuations every now and then, and that's totally cool. These are tiny little bars on a tiny little refinement time frame. So these little fluctuations don't necessarily equate to choppy. Does that make sense? I hope that helps a little bit. And this is one of the reasons why I believe that writing how you feel on the chart is so important, not just for the entries. Your checklist gives me everything that I need to know where your head was for the entry, right? Safia, your entries are outstanding, fan-freaking-tastic, because that's the first piece of the puzzle. So now we go back to day one and we start working on management. So your verbiage on your charts, your annotations on your charts needs to go beyond what got you into the market, and we're going to start talking about what gets you out. Safia, it's a great picture, it's a beautiful trade, and it's a wonderful opportunity for growth. So thank you for posting. Guys, this is what we do in the classroom. For those of you that are new, every trade has an opportunity to talk about entries. Every trade has an opportunity to talk about exits. Debbie, so let's see where we're at. Smalls below the large, larger wide, angled in the direction of the trend. You do indeed have a clear path, right? This is a good look on a large chart. One divergence prints, and you take that entry at the bottom of the window. And Debbie, this is a rock star. Absolutely beautiful entry. A second divergence prints, which means that we're losing momentum, right? The smalls are inside. It may push up higher. It may not. I think that, Debbie, and tell me if you agree on this. One of the reasons that we use that reversal bar as a potential indicator for a stop is it turns this large loss into a 2 to 3 tick loss and allows you to kind of reload, right? And wait and re-examine and say, wait a minute, this resistance is likely to hold based on trigger line location. It moved fast, okay. So maybe this one isn't working out. I get hit, my stop gets hit, it's a small exit, right? 2 or 3 ticks. And then I'll wait for that market to sort itself out, and I'll look for an opportunity maybe for continuation in a minute. That was your third trade today? It's weird because that was the first one that you posted. Knew what you were doing on the other two, huh? I like it. But does that make sense on using that stop? You wouldn't have taken it with money? Oh my gosh, here we go, Debbie. If you wouldn't have taken it with money, don't take it with simulator. Because you're creating muscle memory. You're creating bad habits. Guys, if you get reckless on simulator, how are you going to switch your brain? All right, let's see where we're at here. I clicked on it and I'm not sure who it was. Just one second. Safia, was this you again? It is. Okay. Termination creates a full reversal. Full reversal provides odds favorable. Odds favorable gives a clear path. Safia, it's a beautiful entry, right? And you tightened up fast. And then when it gets to the bottom of the window, you re-enter and you take profits. And then you're out for what looks to be break even on the second lower divergence, pushing you back down. And that's one of the lessons that John's been talking about a lot. That second lower divergence can create a push the other direction, right? And that's exactly what it did. Debbie, it's exactly what it did on your trade as well. I like it. You got in early, it reversed and stopped, reversed again, got in, outside of favorable. You're working hard here. It's this little scary, right, where your emotions get in the way. Sometimes you just got to let it work, right? Stop outside of the window keeps you in this trade. It gives you the opportunity to get profits, get break even, right? And you're good. Safia, you're doing great. You're on an awesome path right now. You are on an awesome path. David B. Always nice to see pictures from you, David. Let's see what you did today. David says, strong bottom, termination, higher divergences, everything says giddy up. It's a 50-50 trade. On that 50-50 trade, divergence prints, guys, it's on that checklist, right? He says he shouldn't have traded. David, I agree with you. I don't care for divergence on a 50-50. It's just not my thing. Stop might have been a little further than it needed to be. And guys, once again, embrace the idea that if it doesn't go from the window, you don't have to add an extra 10 ticks to risk. These can be tiny little losers on medium probability trades. David, it's a good look. I think that divergence spoiled it. Let's see. John Novak. Termination creates a full reversal. Full reversal gives a pullback right to the area, kind of at those large triggers. He knows that it may close the gap to the large triggers, so his stop is in the right spot. Nice trade, John. And he's looking for the continuation down off the termination. Termination conditions create advantages. And guys, there it goes. Boom. This may not be a new user trade. Why? Well, because it traded directly into a mid-band. It traded directly into these one-to-ones. None of the trigger lines broke through, right? Guys, this is terrifying as a new user. We're teaching ourselves to respect termination conditions. The flip side of that, and John knows that this one is going to give me heartburn, is that when you have a termination condition and that area is reached, it's already been tested. And this test pushed us all the way back to the large triggers, and that's where he looked for the opportunity. You'll notice that he didn't look for the opportunity directly into it. He let it retest the large triggers. That's a little bit of chart reading. Safia, which next image? This one? This one? Did I just cover what you were wondering? Oh, well, you got to let me click on it. You're so excited today. You're okay. And then there's the termination low at fibs. Guys, it went from fib to fib, right? And he took advantage of the momentum to get to the fib. No reason to hope and hold. So let's look at the difference between this two, because it's brilliant chart reading. But I want you to see something. Termination condition creates the full reversal, all the momentum, right? Yeah, this is a stop trading. But I'm going to go from start to finish on it. I'm going to talk about it. Guys, this termination creates a full reversal, and it comes right to the mid band with the large triggers a full bar away. It comes right to the one-to-ones with the large triggers all the way up here. So what happens, and I think that this is the brilliance of it, is John Novak does absolutely nothing until this gap is filled. That means that price has already reacted to these areas. Price has already touched this area. Price has already bounced back. It's done everything that he expects it to do. And when it does it, his momentum doesn't blink. Is everybody comfortable with that? This is advanced. His momentum doesn't wane, not even a little bit, right? Termination, full reversal, it bounces, and look at what happens after the bounce. Nothing budges. That's what made him say, yes, let's go. If these triggers started rolling, right? If it got ugly, if he didn't have areas to trade off of, it might be a different scenario. And then this picture, Safia, like he said, this is just him identifying. Remember, not every picture is the trade. Sometimes it's saying this is where I'm going to stop. His entry was on the pullback. After it closed the gap to the large trigger, Safia, he got in on the way down. At the pivot stop out, at resistance, after it closes the gap, he let it do what it needed to do, and then he used Fibonacci as a target. Guys, this is the same chart reading. This is everything that we teach in the classroom each and every day. This is just how easy it becomes when you have the time, when you have the repetitions. John Novak wrote the software, guys. He's good at this. Start simple. And then when you start simple, it's good. All right, Jose, good morning. Are you with me? Are you ready? You're welcome. You're so welcome. Let's take a look, my friend. Jose, are you still in here, Mr. Solar? Yeah, it looks like you are. Cool. So let's do this one first, Jose. And let's talk about termination conditions. And this one took me a while to, this one took a bit for my brain to click. And I made this picture actually for someone in this room. This tends to be everybody's Achilles heel in the beginning. We're great at identifying fibs and one-to-ones. But these divergence highs and lows can be a termination condition, right? The pivot with divergence is not, but when price reaches that line, we have to be aware. We have to say that the market may reverse. Because what happens at these divergence highs and lows, guys, is this is a point where the opposing force stripped the momentum from whoever was in control. If that market is railing up and the buyers are in control, that's the point at a high line where the seller said, no more. We're going the other direction, and I'm stealing your momentum. And Jose, that's what we got on yours right here. This is the point where the seller said, you know what, buyers? No way, you can't do it, right? And you're saying that the price never reached the fib area, and you're absolutely right, it didn't. But what we have is this divergence is also behaving as a potential termination condition. It's a 50-50, and you had that. And this resistance is acting as the 50-50 in the same capacity. Are you with me so far, Jose? So far, so good. And I want you to see something. You put that magic word on there, but, which means that it's a 50-50, but strong momentum. Well, you can only have a 50-50 with strong momentum. A lot of times we'll use words like but, instead, because, when it's not right. And I love this. No divergence. Strong triggers. Your window of opportunity, Jose, is absolutely beautiful. Whoops, wrong one. And Jose, I'm not going to lie. This is a picture-perfect, 100% beautiful entry on a 50-50 trade. I mean, that is everything that we look for, right? So great job on the entry. Are you with me so far? You read it beautifully. The momentum was outstanding. The conditions were perfect on your small chart. Awesome. Remember we said that entries are the first piece of the puzzle. So Jose, if divergence prints on a 50-50 trade, if we're keeping it simple, right? If we're on that best of the best, that focused, keep it simple sunshine plan, this is where the management comes in. If divergence prints, you can exit the trade because you're losing momentum and you also no longer have a clear path. That's one of the reasons why this is on the checklist for the new users, to help give you that advantage. So if divergence prints, absolutely on the 5-1. So no divergence, I love your entry. And the next thing is when you get this reversal bar, reduce that risk, right? You're in at 86, your stop could literally be 84.75. Your stop can be 5 ticks. And if you're in at 86, you could have pulled $100 out of this market before that divergence ever printed and been break even. And your best case scenario on this trade becomes $100 in your pocket. You're already at break even. Divergence prints, you exit the trade. There's no reason to keep it outside of that window of opportunity. That's what I like to call, and I know this because I've done it myself a lot, that's a hope stop. That's the stop where the conditions change, but you hope it goes anyway. Does that make sense? Remember, management's the second part of everything that we do. Jose, your entry is absolutely beautiful. You had every advantage, right? And you want to see something kind of cool? Is 88.25 is that first trouble spot. 88.25 is that problem that we're running into. 88.25 is exactly where this market turned from. That's your spot to take off that first contract. That's that spot to get break even. Beautiful entries create manageable trades. So keep nailing these awesome entries and you're going to learn how to manage them. What tail? No, the tail right here. Are you talking about this? Jose, that tail means absolutely squat. It just means that there's a loss of momentum. And let's keep it that way. Let's keep it to where that tail, yeah, doesn't mean anything. But dun, 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 when price returns to that tail, that can be a trend stopper. And guys, I'm going to tell you right now, you're going to hear this exact same lesson 100 times. It might click on the second time. It might click on the 52nd time. We don't know. But if you keep posting these pictures, we're going to keep talking about it, right? Jose, brilliant entry on a 50-50 trade. And we'll just work on that management. Take that simple plan that I posted in the room, and I'll post it again right now. And go back and look at your 50-50 trades and see if there were management opportunities. Most of the time, if you go back to trades when the emotion is gone, if you go back to the trades when you're not in the moment, you'll be amazed at the clarity that you'll have. And then Jose, small triggers below, large triggers below, everything says great, right? Beautiful entry. And it just didn't work. It just didn't work. And guys, this is the next reason. We saw it with Bobby's too. And one of the reasons that this checklist, I think, is a confidence saver. Let me scroll over. I'm gonna put you through the ringer on this one, Jose. You ready? We're coming from a termination condition. I love everything about it. Let's get arrows that we can see. Boom. You have odds favorable momentum. There's absolutely nothing in your way, and your entry is perfect. Jose, you took a trade that typically wins 70 to 80% of the time. You took a trade that has every advantage that I talk about tirelessly in that first hour. You had momentum, you had a clear path, you had an entry area, you had everything. This is a cost of doing business. This is part of that 20 to 30%. This is the one, yeah, sometimes the market's wrong and you're right. This is the one where it's imperative that you new users put your checklist against it. You know, it's like a court of law. Gosh, Jose, this was the perfect trade and it just didn't work. And if you post these trades that don't work in the room, guys, sometimes you're going to find out that that's all it is. It's just a perfect trade that didn't work. But if the rules are met and the entry is spot on, I don't have any problem putting a trade that doesn't work into my spreadsheet. Because all I'm focused on in the beginning is making sure that my entries are perfect. So Jose, congratulations, you're in the Hall of Fame. Nice trade, Jose. I would take that one every day without hesitation. Wouldn't even blink. And then Debbie, whoops, let me open up your link. Oh, we saw that one. Here's the other. Now the path is clear. Everything says down. You take the first entry and quick profits. Get stopped out right at that mid-band and say, you know what? This is the right trade. And go down to make your money. Nice trade, Debbie. John Novak says odds favorable momentum. Everything says go. Picture perfect. And it just didn't work. And Jose, I think you took this trade, didn't you? Wasn't this the first trade that we saw? I think it's kind of cool that John came back and posted the same thing, or at least the same look. Sometimes they don't work. And we made it through the pictures. So thank you, everybody that posted a chart. There's a lot of great lessons in there, right? There's that one that John Novak just pointed out. Didn't work. Now we're into support, into that pivot stop out. He's going to be in a holding pattern. We're all going to be in a holding pattern. It's either going to break or it's going to hold, right? It's either going to break or it's going to hold. We don't have to figure it out. And Jose, there's one of those. There's that divergence high. Weak triggers barely make it. Turns that market around a little bit. Two divergences. It's a pivot stop out. We do have odds favorable, guys, and it's that 50-50 look. Smalls are through, large are not. With the absolute perfect entry, I don't think I'm going to have any hesitation putting a limit order right at the area where the market is likely to continue. And now it just gets even better, doesn't it? Now that momentum picks up even more. But now that window of opportunity is adjusted, hasn't it? Now my 1-to-1s are the lowest point inside of favorable large triggers. The only NASDAQ issue is when the small triggers are too strong down. So wait for market flow signal. There was none. He's working on that for himself, trading against strong smalls. Man, I have been looking at that for a while, John Novak. I know we've talked about it offline. It's true. Safi and I talked about it the other day too. What do we think, guys? Odds favorable. No terminations. You had a 27 fib, Ron. John, I need you to quit playing favorites with Ron and giving him more fibs than you give me. That's not cool. I rebuilt this morning, Ron. I went through and repaired and reset my database. If you haven't done that in a little bit, that may be the difference. This is the place where it gets you. Price reaches 1-to-1s in support. The trigger lines don't break. Sitting on your hands, right, Safia? It's okay to do that. Why not? Just wait for it to clear. I don't have to be first, right? I don't have to be the first one in at the top. I don't have to be the first one in at the bottom. And then Mike showing us a checklist here. Maybe. I mean, I'm sure you can. Let's see if John has it hidden in Discord. I don't have it, personally. Let's go to trading rules. There it is. Thank you, John. John just posted the link for you, Mike. And you know what? I'm going to steal it too. I thought I had this one. And guys, it's just a checklist, the exact same thing, right? This is the exact same thing as this. It's just when you add a trade, you have to update your plan, guys. You can't use a high probability trend trade checklist for a medium probability trade. You can't use a high volume area trade for a high probability trend trade. Guys, we're termination conditions across the board, right? It's almost identical to the 13.2. There's an awful lot of pushing going on, guys. Guys, there's a million checklists. There's a million trades. There's a million ways to read the indicators. And you are going to be lured by the siren song. I guarantee it. You're going to say, well, John Novak did it. I want to do it, right? John Novak did it. Safia did it. Ron did it. Mike did it. Jose did it. I want to do it. Every one of these people, and I think they'll back me on this, began with a foundation. Everybody kept it simple in the beginning. Everybody learned about odds favorable momentum. Everybody in this room had to be comfortable with the idea that when you have strong triggers, an absolute, well, come on, picture. There we go. Everybody started off saying the trend is up, I should only be looking for longs. That's it. That was the easiest thing that you could ever do. And then they said, because the trend is up, I need to make sure that I have the absolute strongest triggers available. I have the advantage of momentum. And this is what gets me looking for the next rule. And guys, it's that simple. So if you're struggling with identifying odds favorable momentum, then you and I need to have a conversation, right? We need to talk about what it looks like, what it means, what the advantage is, how you're going to use it. And then in that uptrend, with odds favorable momentum, you're going to have to ask yourself, do I have a clear path? And you're going to keep it simple. You're going to say, well, even with that momentum, if price reaches an area and the triggers don't break, I don't have a clear path, so I'm not going to take a trade yet. And if both the small and the large are through, well, then I do have a clear path. And now I have the advantage of momentum. And now I have the advantage of a clear path, right? We're keeping it simple. What's the trend? And do I have momentum in the direction of the trend? And if I do, is my path clear? And if it is, bum, bum, bum. And if it is, if those rules are met, you're going to say something clever like, well, do I have an area inside of favorable large triggers on my small chart? And if I do, I'm going to take a trade, right? Step by step, piece by piece. From momentum to clear path to entry. And guys, to ultimately getting to where you want to be with the software, getting to where you want to be as a trader. Using momentum, Fibonacci, pullbacks, recognizing tails. And guys, I started in the same place you are, and I appreciate it. I really do. I'm no good at taking compliments. But I started where you guys start. I started, you want to know what my biggest hang-up was in the beginning? Is John told me, hey, when it's going down, sell the market. And it took me 30 days to wrap my head around the fact that I could sell something that I didn't own. Hey, Sean, welcome to the classroom. Great to have you. Guys, it freaked me out to no end that I had to sell something that I didn't own. And John's like, dude, just do it. It's cool. And I'm like, I don't get it. What does it mean? And I freaked out and I had to know all the whys. And then he goes, just keep it simple, Mark. We're going to focus on momentum and we're going to focus on not having anything in the way. And we're going to focus on the best entries. And trust me, you're going to grow. All you have to do is post your pictures in the room. I'll give you feedback on everything. I took the same path you guys took. He said, use your spreadsheet so that you can get that recognition through repetition. He told me the exact same thing that I told you guys. And guys, I screwed every one of those up. I hate to admit it. Actually, you know what? I don't hate to admit it. He gave me the exact same path that I gave you guys. Guys, my last name is Novak. I share DNA, right? This is my big brother. He wants me successful. He said, Mark, find pictures of your entries, right? Learn the rules, find pictures, post in class, and use the spreadsheet. To which I said, what do you know, Mr. Writer of software, creator of things, genius, whatever. And I fought him. Man, and I got my butt handed to me. By 30 days, I thought I was brilliant because I had become a simulator millionaire. I had no idea why I was entering trades, why I was exiting trades. I was just doing it and hoping. Guys, when I went live for the first time about 30 days in, I blew out $5,000 in that first day. 22 losing trades instantly. Boom. That was it. Gone. Because I didn't embrace the path. I didn't get feedback. I didn't take pictures. I didn't write rules. I didn't use a spreadsheet, guys, and I paid the price. So about 8 months into learning the software, when I was still learning it myself, I was still getting better and recognizing these things. What I did realize is that simplicity was the key for me. Simplicity was the absolute best of the best. Simplicity kept me focused. It kept me safe. And simplicity meant these 3 rules, having these advantages. So much so that I asked my brother, I was healing from spine surgery, and I said, hey, John, we should teach a 101 class. We need an arena for people that are brand new, for people that don't understand things the way you understand things, for people that don't have the experience and the repetition to just look at a chart and understand all the things that we take for granted. Because that's what killed me. It was the word obvious. Well, this should be obvious. Well, it's not, right? Odds favorable momentum should be obvious, but it's not. Termination conditions should be obvious, but they're not. Not until you do the study to create that obviousness. So I started teaching a 101 class, and it was an hour long, and it was the exact same thing that we teach in the first hour of this classroom. It's designed to give you this outstanding foundation. And then from that outstanding foundation, you're going to simulate and practice over and over. You're going to take every trade. Someone said it earlier, and I loved it. You're going to break everything. And then we're going to fix it, and we're going to refine it. And we're going to get you guys exactly where you want to be. And anybody in this room that's been with Nexgen any amount of time will tell you we're dedicated to your success. And if you raise your hand, if you ask a question, if you send an email, you will get the answer that you're looking for. You will get the clarity that you seek, but it's on you. You have to post in the room. So, all right, that was my little soapbox. Sorry, I get preachy sometimes, right? Check it out, guys. Weak triggers, add a fib, multiple divergences. You're losing advantages. That's how quickly your reads will happen. Crude oil went down. Everything went down. Guys, there's one of those 50-50s with one divergence. Some of you took it, some of you didn't. But when a termination creates a full reversal, that full reversal gives odds favorable. That gives me an advantage. Strong triggers break things. And if I only have one divergence and strong triggers and only one line where that market is likely to continue, guys, look at your window of opportunity. Is this look from a termination condition worth 3 or 4 or 5 ticks of risk? It may not be in the beginning because your rules aren't met, but remember that simplicity plan is designed to build your confidence to increase your chart reading. I'd take this one all day long. And I'd take quick profits at the area that I'm hoping breaks. and I'd get to break even, and guys, I don't have a reason to exit this trade until 60, and I was in at 95. That's where you're going, but you have to embrace where you're at. Termination, there's that higher divergence John Novak talks about all the time. Termination, full reversal, that second higher divergence is a great confirmation tool. And now we just have to work our way through some shenanigans here. So we start playing the if then. If I get this look, if I have these advantages, then I'll take this trade. Price reaches resistance, no trigger lines break through. It's a tough look, right? I prefer to respect a fib. As you grow with the software, you may say, with a pivot stop out at support and a higher divergence, the likelihood of this area to break goes up, but as a new user, I won't take this trade. As an experienced user, you may say, all right, I'll take it, but if something changes, I'm going to exit this trade. I'm going to identify my first trouble spot, and that's where I'm going to take profits. Right, guys, this is not a high probability trend trade. This is taking advantage of momentum from a termination that creates a full reversal. It's a low risk trade. It's only $100 of risk. But it's breaking rules, guys, and rules are in place to keep you safe. Fluctuations, right? Not choppy, Safia? I couldn't put my checklist against this one because of the termination condition. Do you guys see that? Do you see how the market fluctuates? There's my first challenge. So I take quick profits and I go break even. I got out at the trouble spot. And now, if it comes back to my entry, I'll exit. And if it doesn't, well, then I'm in this medium probability trade from a termination condition that creates a full reversal. Now my small triggers are turning green. All of my triggers are still up. My momentum is still strong. What do you think? You'll begin to manage and say, maybe I'll use Fibonacci for a second target. Maybe if divergence prints, I'll exit the trade because it's still 50-50. Do you see how management... Sorry, I'm trying to make it where we can see this. Your management will evolve. But great entries create manageable trades. Termination conditions, especially with a higher divergence, creates an advantage. Guys, this one isn't a high probability trend trade. Now I have that tail. Guys, now I'm in this trade. I have absolutely nothing to lose. It continues to go up. My triggers are strong. My triggers are strong. My area is breaking. What happens if I get a pullback? I still have areas inside of favorable large triggers. I want to make sure that my stop's not there, right? If I get a fluctuation here, if I get a little tail and a move up, maybe, because we're still 50-50, I'll move a stop. Right now, I'll put it where if divergence prints, because it's 50-50, I can exit the trade. And then if the rules are met for a high probability trend trade, I re-enter. Guys, do you see how everything is a constant state? If then, if this happens, then I'll do that. My stop was in place. It didn't hit it. I'm still in the trade. Guys, it may still go. I have nothing to lose and I have money in the bank. Everything originates from a high probability trend trade. Everything, your highest chance of success, those things that kind of bring a little extra success, terminations, there's that higher divergence. John was posting pictures of it all day long. We had a fib update, so I'll put my target at that fib. Joel, what'd you do? And I'm not going to touch it, guys. We'll just see what happens for grins. 50-50 with divergence, not your trade. There's nothing. So Joel, termination creates a full reversal. Full reversal creates odds favorable. Odds favorable is a 50-50. There's one divergence, strong triggers, little window of opportunity. What do you need help with, Joel? Do you need help breaking your rules? See how I worded that? Do you need me to help you feel okay breaking your rules? Or do you need me to help you by saying, great job following your checklist? Take these pictures, annotate the conditions prior, and see if this one's worth taking. Go find 50 pictures of it. Joel, this one doesn't fit. Great job, great restraint, great patience. Terminations that create full reversals create advantages, right? Odds favorable momentum creates advantages. This one might be worth a couple ticks. Or if you don't like this entry, this little pullback that doesn't have divergence right to support, maybe a second chance entry. How was that? But man, great job. You followed your checklist, Joel. That's hard to do. That's the hardest part. Doing nothing when there's nothing to do. Safia, you took it because of the termination, because of the great reversal, because everything's set up. You have a clear path. Picture perfect. Out at the first trouble spot. Beautiful trade, Safia. Did it ever get me? Oh, it did. It came back and got me, didn't it? But then it had odds favorable on the clear path, and it pulled right back to support inside of favorable large triggers. And off it goes to the first trouble spot. Once again. What do you think, guys? That little addition was worth $220 in the bank. $160. Mine was pretend money. But do you see how that works, guys? Where did it come from? That's the best of the best. Jay Solar, I know what you're going to ask. No, it's not a high probability trend trade. Yes, it's directly into a termination condition. And absolutely not. I am not advocating for you guys to ever do that until you are great at the simple. Did I head you off at the pass there? Keep it simple at first, and what you're going to do through repetition and study is you may add this one to what you do. No, sorry. Guys, don't ever get confused by what someone else is doing, right? Or if you have a question, it's okay to ask. You weren't here for this one, Jose? This was the best review of the day. I'm going to show you why. Let me find John Novak's response. No, we looked at it. So let's do this. There's your picture right there. Beautiful, 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 beautiful. All the way. This was a cost of doing business. Jose, I even put you into my spreadsheet on this one. This was a perfect entry. And then John Novak came in behind and said, hey, sometimes the market's wrong. This was one of those times. That was the perfect trade. There it is. He said, sometimes the market is wrong. You were right. Isn't that awesome? But it's nice, though, when you get that little bit of feedback. There you go. That was from John Novak. When you get that little bit of feedback, and that checklist keeps you on the right side of things. It keeps you focused on the best of the best. It makes sure that you're in the game, right? That you're doing it. That you're following those rules. Guys, if you didn't take the first one directly into fibs and you decided to take the second one, it went right to the target, didn't it? Hammer, KM, S-Fits, G. Guys, do you see it? You don't have to take the iffy ones at first, but you might end up with that because of where it came from. The market is a bountiful goddess of wonderfulness. And eventually, with a little bit of study, with a little bit of repetition, with a lot of feedback, your plan is going to grow the same way you grow, guys. You're going to go from simple, step by step, easy. And you're going to begin to recognize patterns, right? You're going to begin to recognize conditions that you're like, man, I've seen this 100 times. I remember this look. And you can create scenarios, you can create expectations based on patterns. When the market trades directly into resistance and those large triggers are a full bar away, well, a lot of times that market loves to come back to those large triggers. So, KM, great question. And I'm going to share this again. Whoops. And guys, I share this KISS trading plan probably 7 or 8 times a day. I believe in it that much. So the same way that we keep it mechanical, the same way we keep it methodical for entries, this is going to be the same approach that you have for exits initially, right? Because to manage a trade takes an ability to read your charts. And what we're doing in this first 30 days is we're developing the ability to read our charts, to understand these things. So what we're looking at is initially KM, the stops outside of the window where the market shouldn't go. Use that reversal bar to reduce risk and just have profit targets. Let it do what it's going to do. Don't worry so much about the result. Worry about the execution for entry because that's what's going to yield results. And then if you stole my spreadsheet or if you just have the one, that mechanical approach is right here. And it talks about all those entries and exits. Let's see what you did. Yeah, you did. All right, so your large chart, I'm trying to see where you got in. Your large chart was down, your path was clear. So from what I can gauge, and it's hard to tell because I don't see your entry. 35.75, 35.75. Did you get in at the mid-band here? Or did you get in over here when it started to go down? And a little way to fix this, guys, so that you can see your entries, I'll show you and then we'll come back to your picture. If you right-click on your chart and you go to Data Series and scroll all the way to the bottom, you can plot your executions. You can plot your text and your marker and apply it. And then every time you enter the market, it'll show you. So you got in at the gold mark. Oh, I know that you got in at 35.75. What I'm curious, and let me show you why I'm curious. I've got your entry price, absolutely no worries. Did you get in here? Did you get in here? Or did you get in here? Did you get in on this side of resistance or did you get in on that side of resistance? Did you hold it from all the way back here, all the way down, all the way up? You see how I'm... But let's go through the evaluation process. You got through at the first one, all the way over here. Whew. Right on. So that was 845. Let me see if I can find this one. That was S&P. So here's the S&P. Let's find your entry. Here was your entry here. 43.37. So you were in right about here, right? 934. Bump, bump, bump. So you got in on the pullback. Everything said down, your path was clear, you wait for the pullback, and you got in at 37.75, is that right? 35.75. So you got in at the very bottom of the move. And here's going to be your biggest advantage. You ready, S-Fits? As you grow more comfortable with the software and you really embrace these rules, Your momentum, it's a strong trending market. It's not the best look, but everything says down. Your path is completely clear. You're small and large or below support. And do you see how support begins to act as resistance? Your entry for this trade, if you embrace the idea of areas inside of favorable large triggers, it gets you into this trade up here closer to resistance. Stop keeps you safe. You get a reversal bar. And then your stop will ultimately go just above this reversal bar. So if you're in the market, you got in at 35.75. You got in all the way down here before the pullback. If you're in this market up here at 38, by the time you get to 34 right here on 2 contracts, you're $300 richer, right? Mechanical, methodical, taking those profits in the beginning. You're trading with the trend. You're trading with direction. You have every advantage in this trade, and you really only need to make a little money from there to there. And then you get a divergence. And then you get no areas inside of favorable large triggers. And that's when this happens over here. The trend changes. You lose your momentum. It's still an area likely to hold, but you're just not sure where. Here you can kind of relax and do nothing and not have to sit through all of that nonsense and hoping and hoping and hoping. And your stop kept you safe, but you gave back everything that you made, hoping that this area holds with a trend change, stuff like that. So what we're going to be able to do is we're going to be able to refine it down and keep you from having to sit through this stuff. And what you may even find is as you grow with the software, after making money down, I've got too many arrows, so let's clear it up a little bit. After making money and taking profits here, when it pulls back, you may find a re-entry somewhere over here that takes you down to that Fibonacci area. That's going to be when you learn to read the charts just a little bit more, looking at these different scenarios. Because when price reaches this area and these large triggers don't follow, that's our indication that the market's probably going to continue down to that next key area. And you'll be able to look for opportunities over on this side without having to sit through all that heartache and anxiety-inducing P&L fluctuation. Does that make sense? Great picture. Thank you for posting. And then the next step, you're still showing bad habits. It's day 2. You're going to have all the bad habits. I think that's great. So your next step is this is awesome, right? But it doesn't show me the other chart. I have no idea why you're doing what you're doing for a couple reasons. Now I have the other chart. I like it. Everything says down, right? Smalls are down, large are down, coming off of resistance. Everything says down. You enter at the midband. This divergence low is your first trouble spot. Gives you an opportunity to take profits right there. You can divide up your profits. But everything says down, right? We're coming off resistance. Everything says down. And you're looking for the market to get down to Fibonacci support. I hardly feel like this is bad habits. And you got paid on this one. Do you notice how every chart agreed? S-fits? What a huge advantage. Every trigger's down. Everything says down. You're coming off resistance. It's not a high probability trend trade. But at least you're trading with the trend. You're trading with the triggers. You're trading with the areas. And you're looking for that opportunity to go down. And we'll just keep refining this and making this better. But I do want to show you something, okay? And this will make your life easier. Let me find back from the education page. Joel, that's what you've been doing, right? Repetition. Over and over. Following your rules. Writing it down. The problem is, Joel, is every time you see somebody do something you're not doing, you try to do it. So stay focused on your stuff. Stay focused on your trades. Don't miss them when they present. Skip them when they don't. And then when you're consistent, then add something new. I know you do. All right, SFITs. So you can put in those stops and targets so you don't have to put in those manually with your ATM strategy. So come down and make a custom. And what that's going to do is that's going to allow you to create different targets. So you can have maybe 3 contracts in 3 different spots. One at the first trouble spot, one at the next fib, one at the fib after. And you can put your stop loss in an appropriate spot, right? And you can do all this sort of stuff. That ATM strategy is going to help you manage these trades a little better and have calculated risk outside of that window of opportunity. If you need help setting it up, let me know. But you gave yourself the advantage of trading with the trend and the direction. And man, that typically yields results. And then we get straight down to Fibonacci with absolutely no trigger lines through. Guys, look at this. Multiple divergences, higher divergence. And now we're 50-50 from a termination that creates a full reversal. Look at your checklist. What are your rules? Odds favorable, no terminations. Area inside of favorable large triggers, and I'm coming from a good bottom. Do you guys see it? Termination condition creates a full reversal. Full reversal gives me odds favorable. Odds favorable has a clear path. Clear path. And I have an area of support inside of favorable large triggers. It's out of my hands now. Give me a Y in the room, guys. That's how quickly the analysis should happen. With a little bit of study, that's how fast you're going to piece it together. I start at the beginning of my checklist vocally when I'm alone in a room. My cat thinks I'm crazy. Termination creates a full reversal. Full reversal gives me odds favorable momentum. Odds favorable momentum and no areas reached. The only thing I'm looking for is my window of opportunity. From the top, from the highest point of support to the lowest point of support inside of favorable large triggers. Do you guys see it? The window is 6 ticks wide. What does that mean? That means that my stop will go 3 or 4 ticks below that window maybe. Worst case scenario, I'm risking 10 ticks on this, 10 ticks with all these advantages. Does that make sense? Hammer, I know you're new. How do you feel? KM? It hasn't formed a tail, right? But we can identify where that tail is most likely to form. SFITs, trading with the triggers, trading with the trend, trading with momentum. Everything says that I have a statistical advantage. If I'm in at 92, I can identify Fibonacci resistance, and this is a good lesson. Let's take a picture. If I take a picture of this right now, this is what we call a pre-trade picture. Making sure that the rules are met. This fib is not a termination condition. This fib is a target, right? If I get an entry, this is where I expect it to go. New users will say sometimes, but man, there's only 4 ticks to that fib. Mark, you don't have room. Remember, guys, we're selling pullbacks. We're using that refinement tool. We're looking for that window of opportunity. There's plenty of room to get back to that fib. Does that make sense? Jose, those are all your entry prices. I don't know how to consolidate them. To be honest with you. Safia, take care. I'm sorry. I don't have an answer on that one. I've never really thought about it. You might send Jason a little note, or maybe ask it in the traders room where guys have been using this longer. I've never really noticed it or thought about it. Y'all, if price reaches resistance, I have to cancel my order, right? But if price doesn't reach resistance, I can leave that order in. Jay Solar, I'll ask John. Maybe I'll have an answer tomorrow for that one. Guys, this is class. This is every day for the rest of your trading life. Straight to resistance. Sometimes we just don't get an opportunity. Straight to resistance. If you doubt the power of Fibonacci, guys, there it is. Good stuff. Did we learn anything today? I hope so. I learn something every day. I appreciate you guys being here. I appreciate you guys posting your charts and being a little bit vulnerable. I know that's hard in the beginning. Remember the path, guys. The more you post, the quicker you're going to get to where you want to be, the more questions you ask. And I can tell you that you're going to misunderstand lessons, and if you raise your hand and ask, we're going to clear it up for you. No worries at all. There's also, thanks Mike, guys, there's this phenomenon that as soon as you start feeling comfortable, you stop posting in the room. Don't do that. Don't fall for that little trick, that little devil on your shoulder saying you don't need them anymore. You won 2 trades in a row. You're a badass. Guys, keep posting everything. Let's keep working together. I don't care if you're on day 1 or day 1,000. I'll always give feedback. I'll always try to help. But that's it for me today. I appreciate you guys being here. I will see you tomorrow morning at 9 a.m. And be good, everybody. See you in the morning. Joel, the market is going to create the opportunities. You're going to recognize them and take advantage, right? Guys, the only thing that we're in control of is whether or not our rules are met. Keep your rules simple. And you guys are all on a great path. We're all going to get to where we want to be, just at different times. I'll see you guys in the morning. Be good, guys.